I talk about this in the stream all the time. It's like, dude, what is it like when we on these win streaks that we don't want to win no more? Like it's like the self
Yeah,
sabotage is real. Like, god damn.
it is, bro. It's super real. Yeah.
It's like I don't want to be a winner no more. It's like I want to lose so I can come back, like have a comeback story or something. But all right, let me hurry up and set this thing up on my other workstation because I need to close these puts because I think they're gonna probably try to bounce it here. I mean, we may get a drop back down, but I mean these puts are 0 DTE, so I'm gonna need to close these real quick.
Yeah.
Mm.
He updated it to 5 out of 7. Oh, no. No, that's his balance. Alfredo. Alright. You're at open and anything. Nothing really needs to happen yet.
All right, I'm back. I'm back. Good morning, everybody. Good morning. Good morning. Good morning. Okay. All right.
What up? What up?
My boy Smith is in the building.
Yeah, guys. It's ups and downs over here as far as me getting in the chat. Ups and downs. But fortunately, I'm here now today. I'm not gonna be trading because I already finished trading. I'm just gonna be seeing what I see. Any setups for me.
Of course.
Somebody talking about check his stream out real quick.
Good morning. Okay. Good morning, Matt Moxie. Yeah, what the hell is going on right now? Okay. All right. So right now, this world clock it's I don't know what the hell is wrong with it. So I'm just gonna close it. It's just acting buggy right now. And so, yeah, this was the short move that I was looking for yesterday. Man, I swear, bears only show up when you don't want them to. They don't
you hate
show up
when
when
it
you need them.
happens in pre-market?
Yeah.
You wake up, you get in the market at open, and the big move has already happened.
Yeah.
You just like, dang.
So yeah, I'm not gonna lie, this was very frustrating. Seeing this. I did see the opportunity to short pre-market. Initially, I did take it, but I did close it because of yesterday. I was like, man, I will never be a bear ever again. This is why I gave up my bear card the first time. The bears don't show up at all, man.
Not when you need them to or want them to.
Yeah, it's like when we needed them the most, they weren't there. Bastards. Bastards.
They go into hibernation when you need them.
Mm-hmm. Yep. Yeah, that's actually, I mean, I wouldn't be surprised if that's how it works out today. I wouldn't be surprised. And look at what planning does. I planned for this trade last night. I was like, well, because I'm not going to take this short, I'm going to find a long entry. And look how perfect. I'm talking about to the damn T. Zero drawdown. Zero drawdown in this thing. But in my other account, apparently, obviously I missed that one. I'm kind of upset about that, but yeah.
Yeah, no, that's a beautiful entry though. Looking at it, right at the dang bottom to the tick.
But I think
just be careful if they go do a second pullback, second leg.
yeah. I think they might. That's why I got a lot of my targets coming off at that 201. I do believe that they're going to at least try to tap that first. They're going to tap that, and then we can probably see another leg down. And I'm going to be ready for that entry at 183. I'm going to probably add some more. Good morning, Alfred. Yeah, but I have my other runner targets just in case. I think this yeah. We'll see. We'll see. Bears showing up a day late. I should have showed up yesterday. Shit made it look like I didn't know what the hell I was talking about yesterday. I was like, dude, this shit was supposed to be short. Like, where the Bears at? Where y'all at?
Yeah.
But
I hear some
so what?
buying. Here's some buying. Got buy pressure coming in.
Mm-hmm.
AQ's selling. This is like, I don't know, it's kind of flat compared to that drop.
Hmm.
I don't know what it is that. No.
Yeah, they certainly was, Alfred. They certainly was making me look foolish. Like I know what the hell I was talking about. Making me look foolish. I was like, yo, where these bears at? But the bulls just aren't coming. So this is like, so yesterday, the move I was looking for was, so where did I go short? I went short at 218. I was hoping that price can get down to this 190 level. I mean, if it bounced at 200, okay, that's 200. But I would have been 18 points, and that's what I was looking for. And he did all that just to do it in pre-market. Freaking bastard bears. But
Sound
I've
like
already
you
written
got.
in my journal, I ain't gonna never be no bear no more. You said what?
I was about to say you sound like you got some animosity against the Bears now.
Yep. I gave them a chance. They didn't even come through yesterday.
Chance.
They didn't even come through yesterday, man. So, and because of that, he says, I don't fuck with them no more. I don't fuck with them no more. Yeah, that's exactly how it is. See, these bulls, when they came in, it was like, yeah, we bulls in here. This is what we do. These bears, on the other hand, was all weak. And I was, like I said last night, I'm convinced there is no bears in the market. All bears went extinct during that 2020 run up. All the real ones, they're extinct now. The only reason why this market goes down is when the bulls take their profit. What's up, Danny? What's up, Katie? Good morning, everybody. As you can see, I planned for this trade, and I got ticked into the T. And I'm not gonna lie, I was kind of nervous about this because this is not my normal style of trading. But I looked at I looked at previous areas of support. I looked at the candle structure, and I was thinking to myself, I saw that this was a value high at let me push this up. I saw that they kind of broke it here, so I was like, you know what? Let me put it like a tick above it because I think that's what they're going to try to do. My daughter wants to say hi to the shrimp, and come on. But anyway, so when I was looking at the charts last night, I was like, man, these bears are weak. But I will say this: they're weak, but they have shown that okay, yeah, y'all traded through our supply area. Y'all made us look like we was weak out here because they was weak, but they have pushed price down. But I do want to point out though, I do want to point out that I do think that the Bulls or the Bears will kind of be successful, but we got a two-legged pullback, a deep two-legged pullback into support. Now, I don't think we run up this high. I mean, we'll see. Honestly, I think we can possibly get to this 207 level, 208, 207 for real, for real, for real. But I think that they're trying to get this level down here for sure. They're trying to touch this level, last week's close, before we get any real run back up. This is where these big lot buyers are going to probably be in this area at this range right here. And I'm going to show you why. I'm going to show you. You see all this consolidation right here? We got that breakout. This is the area where they broke price out after we got that gap fill. There's going to be buyers here. There's going to be buyers in this area. So I'm going to be looking to get in long here if this trade don't work out. But I'm confident that at least I should get my first target hit. I'm confident that I should get it, the first one hit at least. I mean, if they come back down and I get filled again, then we'll just do it again. But I think this area down here is where they really want to come to. Or not this area. This 160 area. So we'll see. We'll see. We'll see. You said, am I short? No, I don't short anymore. Bears are weak in this market. They've been weak. Says trail my stop. One step at a time, Alfred. One step at a time.
What you mean? What you mean, one step at a time?
One step at a time, man. That's too much. I mean, you trail your stop, and then you get stopped out, and then price keeps going in your direction. One step at a time. I'll trail my stop. I'll move my stop to break even once price gets close to that. Once price gets close to that first target, because I mean, even though my position is up right now, I would love for them to come back and fill this order right here as well. I would love for that to happen, but I would prefer for my first target to get hit actually. So in this situation, it's a win-win. Yeah, I'll lose the 9 points. Yeah, but if I come back, I mean, I'll have more at stake in this trade, or not more at stake, but it'll be more profitable. But I think my first target is going to get hit. I'm confident.
Yeah, I just don't like the way the leg looks on NQ. Let me see. Let me check the 5 minute. Okay, 5 minutes a little bit. The 2K tick chart looks kind of sus to me.
Well, so I'm gonna show you. It's the same. It's almost the same pattern. I think you can at least get the VWAP. VWAP is right around this area of distribution right here, and we got a two-legged pullback into the support area. So, I mean, we got this two-legged pullback into this area of support. So, I don't think the bull. You said what?
Sell it off. So
I think we get to VWAP, and if we can shoot past VWAP, we can get to that 200. You said what?
Get to VWAP and sell off.
Possibly. Because VWAP is right here at this VWAP is right here at this range, right here. Line it up perfectly.
VWAP, it's about 20 points away on NQ. Which, I mean, that's nothing for NQ, but.
So Danny.
Oh, go ahead.
So Danny said that the weekly open is at 1847. 1847. Oh, we already passed that. What do you mean by that, Danny? But go ahead, Smith.
No, I was just saying it's an area I had on my chart on TradingView to be careful of, but it looks like they trying to go for VWAP on NQ at least.
He says, I think it might run up and then retrace back. Yeah, that's definitely possible. All right, so right now, at least for the ES traders. I mean, unfortunately, this setup happened off stream, so I can't do anything about that. But I mean, I'm confident it'll hit my target, but it'd be kind of foolish for it to come back. There we go, baby. Hit that first target for us. Hit that first target. Hit that first target. We're not going to play that game. Hit that. There we go. First target hit, baby. First target hit. So
reaching overbought territory on NQ on the RSI. But, oh, that's dirty, NQ. You're not going to touch VWAP for the people?
I mean, it almost kissed it. It's right, like, dude, it's just right there. Like,
Yeah, I know, but it ran up like it was gonna hit it at first, and then went down, started to go down a little.
Mhm.
All right, all right.
You got
We
it?
got the kiss. VWAP.
I'm gonna
All
probably
right.
take one more here. I'm taking one, so I only have two. So if this does come back, we got majority of the profits off. I mean, right now, we only got two more contracts. We've realized over $600 in profit right now. So this is actually a really
Nice.
good trade. I mean, these are runners at this point.
That's an excellent trade.
Yeah.
Caught the bottom.
Well, we'll see. But honestly, the way it's looking, I think we get another run down. Honestly, I think we get another run down. So we're gonna trail this because I think, and I don't know why I did this. I probably wasn't paying attention. I wasn't paying attention. So obviously, I don't have to cancel these orders, and I'm going to have to move it actually to 168 and 163. And if these don't hit today, then I'm gonna keep them on until tomorrow as well. So I'm gonna front run that 163 at 164. I'm gonna buy limit at 164, and I'm gonna buy 12. I'm gonna buy 12 at 168. Yeah, I'll put it at 168. 168 is good, I think, because that's where we got that breakout, and you can see that was that high on whatever day that was. Was that yesterday? Yeah. So I think that we can at least get this high touched probably today,
Well,
maybe tomorrow, but we'll see.
was that pop just now?
NQ. Yep.
Yeah.
Yeah, I think
Oh,
we touching the 200 EMA, and then they're gonna probably see a
yeah.
reversal. So be mindful of y'all if y'all in this. He says the 160 next fib is what it wants. The 160, yeah. That 200 EMA, I think we're gonna touch it, and I think that's where these weak ass bears might come in. These weak ass bears might come in right there.
It just hit my. Well, never mind, because this was from way, way earlier. Way, way earlier, and I was trading pre-market. That's when the low was sitting at for NQ. The low was sitting at 181
Mm-hmm.
at the time. So it just hit that golden fib
Yeah.
for a potential reversal, but that was like hours ago. So that might be invalidated. Let's see if it breaks through 160.
Yeah, we may can get to, so we may can get to 52.10, 52.9 on the ES. We may touch that. We may. And Katie, so okay, never. Well, we'll see. So Katie, usually I do run minis, but what I'm doing with this phase of the stream is now I'm I am doing it. What my goal is actually trying to help newer traders and setting up good trading habits. And honestly, it's going to help me too, because I obviously me and my trading partner Smith, we're great traders, but we do have some habits that honestly I need to work out of mine personally.
Me too. I do got bad habits. And I admit that. Stubbornness is one of them.
Yeah, stubbornness is a big part for me. That's the big part for me. Like, nah, I need my targets, goddamn it. But sometimes the shit don't work out. Like yesterday, I mean, I was up 8, 9 points yesterday, so I mean that's good for the ES. But damn it, I wanted this. This is what I was looking for yesterday, and I wasn't going to get out of this position until I got it. And Obviously, it happened. Yeah. So my goal is I'm trading micros. We're planning out our trades. We're setting limits. The good thing about trading micros is that you'll keep your account longer, and not jumping into a trade and actually planning for it and actually setting limits. What that does, or what that's going to help, newer traders, is just watch the price action. You're not jumping in because you see a big green candle. You're jumping in because, I mean, however you want to trade, if it's a fair value gap, if it's a range or whatever, you're planning for that trade, you're getting into it, and you're respecting your stops. And micros is going to allow you to do that. So from now on, I'm going to just trade micros. I'm going to demonstrate that you can make money in micros consistently. Right now, I'm up $720 with my 2 contracts left. I've already realized $600 in profit already. So we can see if we get these targets hit. And by the end of the day, I probably can be up like $800 or $900. And we can do this every day. We can make $900 a day. Be consistent with that profit target. Don't overtrade. And yeah, we can do it. It's just unfortunate that this trade just happened off stream. I mean, I'm trying my best to not. Well, I mean, you can't control the market. Actually, you can't control it, but I'm gonna try my best to take as many trades and setups on stream as possible. If you're a member of the YouTube, not a member, but if I take a trade pre-market, I mean, I guess I can kind of find a way to kind of say, hey, this is what I'm looking at. If you agree with this, you can do it as you want. Maybe post it on YouTube or in the Discord or something like that. But that's what I'm doing. So from now on, all trades will be in micros from now on. Yeah.
Yeah. For me this morning, when I took my short, I'll send you. I'll post a screenshot of my chart in the Discord. I caught such an insignificant part of the drop, but I was at the same time. I did scale to, and y'all probably gonna kill me, but I did scale to 10 contracts. But I had confidence in the move, though. I just kind of jumped the gun, and that's another thing I got to work on, not jumping it and getting in at the right spots. Like if I would have got in at VWAP earlier, I think I took my trades at around 4 this morning, 4 a.m. Central. So yeah, I ended up scaling, and it's such an insignificant portion of this super drop we had this morning in pre-market. But I didn't need all of that though. I cut it at 1,800. I only made $1,800, and I cut it. But if you look at the chart, it's actually kind of hilarious. This wasn't an eval. I would have held that thing. I would say, hey,
let that shit ride, baby.
Yeah. But I mean, it is what it is. It's an eval, so it's not like I'm not gonna be all super stubborn and risky, especially after I'm passing. I gotta do the time now. It's all about the days now.
Yeah. Yeah. And so it's gonna start doing that too. So that was a nice example yesterday with your training drill. Yeah, and I'm actually gonna start doing that now when the times, because it's like, man, like we have a great opportunity here. A great opportunity just to really to improve ourselves. And I mean, when new traders come in, you don't have to worry about no food. Like when I don't want to say that. So my thing with these fuels is like I said, I spent a lot of money with these guys because we trusted that they knew what they were talking about. And once we've learned that it was all lies and all the bullshit, like that kind of became my life's mission. Like I hate them. I didn't know. It's not that I hate them. I just hate liars. Period. I don't like when people lie. It's like there's no reason to lie. And but I mean, you know, that's different with people. Well, anyway, that's not the point. My thing is that I kind of want to do away with that crap. Like, I mean, yeah, I have my days where it's like, yeah, I get stubborn, and like yesterday, I get stubborn. But for the most part, I feel that I can really just help people, like really help them, get them to start trading. And honestly, I was thinking about this over the weekend. I'm tired of ICT, man. I ain't gonna lie. I'm tired of him. Tired of fools like him. We need real traders to actually know what they're talking about. We need some don't inverse the Sherm, don't inverse the Smith concepts that people talking about. That's what we need, goddammit. Don't inverse the Sherm. Yeah, you heard about them don't inverse the Sherm concepts? That's what we need. But all jokes aside, that's actually what I want to do. That's what I want to do. Not that bull crap that like get cute and don't know how to really trade, but you know how to trade, but you don't know how to execute. We're tired of that. We tired of that shit. Says retracement.
Yeah, that's definitely two different things.
Yeah. He knows how to trade, but he doesn't know how to execute. And I think everybody cares about the execution more than the trade itself. So I think that this might be the drop. I mean, we might get a pullback here. We may get a pullback here at this level right now. I'm gonna trail this, man. I'm gonna trail it so we can at least lock in some of this profit. I mean, we may get a drop all the way back down. Who knows? But I did see that this possibly could be reversing on the NQ, possibly. But these bears have been weak, so you just don't know. You just don't know what they're gonna do here. The bulls have been showing a lot of strength, but I mean, the bears have shown like, yo, we in supply, baby.
Is CPI next week or?
Yeah, it's next week. No, it's next week on Wednesday. Mm-hmm.
Okay. For some reason I thought it was today, and I was looking at trying to check the news and everything. I was like, "Where's CPI at?" I thought CPI was.
Shit. Well, if you're looking for it now, you know it only comes out at 7:30, so the market would already reacted to that.
Yeah.
But
I was tripping.
Says inverse a tilted Sherm. Yeah, that's actually an inverse when I'm tilted. Yeah. When I get, I mean, I think by now you should know if I'm tilted. If I'm being super stubborn, yeah, and I'm not even. It's like no, I want what I want. God damn it! It's like you better do it. Market, do it. Yeah, the tilted Sherm. Yeah, but that emotional hijacking is real because once the market closed yesterday, like I felt whatever monster was holding on to me yesterday. I felt it release and I was like, you fucking bastard. And I look back at the charts and I was like, yo, why was I just so adamant about this damn short? Mind you, it happened. So I was just early. But once I recognized that the bulls had it and that the momentum was still strong on the bullish side, I should have I did move my stops to break even. So I'm not going to sit here and say I did everything completely wrong. But yeah. The bulls yesterday came out with a force, and I wasn't ready for that. And then, go ahead.
No, go ahead.
Oh no, I was gonna say that I forgot who said it, but that was like, yeah, you need Smith in here to balance you out sometimes, and I was like, yeah, yeah.
You don't be listening to me anyway. When you in that mode, it's hard to get out. all you gonna do is be like, all right. I'm like, yeah, he's still in the trade. Like, no, what are you talking about? I closed it. Shut up. No, you did. Remember? You probably don't remember because we had so many of these moments, unfortunately. But it was a while ago. I was in a trade, and I was like, you were saying because you weren't in anything, so you were able to see rationally. And I was in a trade, and it was just going against me. I was just so stubborn, and I finally got out, and took like a super L.
Mm-hmm.
But you were trying to tell me to get out way ahead of that. I was like, okay, all right, nah.
Yo, that like this is what we're talking about, man. Like if these traders, like if somebody comes out and say that, yeah, we don't go tilt, we don't do this, we're perfect, we're this and we're that, I just stop listening to them
Yeah,
now because I just know that they're lying. It's like there's
yeah,
no way you can't get emotional while trading. There's no way.
yeah, yeah. And I hate how they try to put that out there. Like, yeah, we're all human, bro. Like, there's gonna be, and it's, especially if it's your money, your
Mm-hmm.
own personal funds, it's gonna be hella emotion to attach to it. Even if, let's say, even if you grew your account, you put in X amount of money, you grew it to a certain point, and then let's say you go on a losing streak. Technically, all that money that you made, you took from the market, but
Mm-hmm.
still, you're gonna be protective of that and be like, "Nah, that's my money. Like I earned that." There's gonna be some type of emotion attached to that. I don't care. Like you said, I don't care what they say. Stop lying. Let's be real.
Mm-hmm. Shit, if you ain't live streaming, we ain't trying to hear you. Man, we ain't trying to hear that shit no more, man. Now we in a
Yeah,
new era.
exactly.
Live stream your trades, buddy.
Yeah, don't hindsight it. Hindsight it. You gotta get live with it.
Mm-hmm.
Then for there's that barrier that you got to go through live stream trading too.
Mm-hmm.
They try to act like it's all the same. I'm like, no, it's not. Because
Yeah.
now you gotta feel like everybody's watching you and everybody's kind of like judging you, sort of thing. Yeah, like, yeah, almost like an added pressure. Me, I don't care anymore. At first, I did have that at first,
Mm-hmm.
but now I don't. But that was another step, a hurdle to overcome. In the
Yeah.
beginning.
Yeah. And I didn't when with our original setup when Brandon was in the front, actually, yeah, they might try to sell this off the 21 or off the 200. I'm seeing they're trying to set up a short right here. I'm seeing they're trying to set it up or the Bears are trying, but like I said, I ain't gonna ever be a bear no more because y'all weak. Y'all Bears weak for real. But we'll see with NQ. Um,
On NQ, I got the 200 moving average right at the opening price.
mm,
NQ opened up at 194, and it's like right there. So I think they could get to it, unless they, front run that. But I think they could get to that, and then drop maybe 200 and then drop, and we'll see.
mm. Yeah, so this little range right here, man, from 197 to right here is going to be a challenge for bulls. The bulls are going to have to really trade through this and get a close above this high. But that 216 level, that actually may be where the bulls or the bears may really come in and try to knock price right back down. This is actually where price may be trying to get to in this area of liquidity if the bulls are or the bears are not successful defending this area. So we'll see. We will see. We will definitely see. Because yesterday the bulls, you couldn't stop them yesterday. Now all of a sudden it's like, damn, where all the bulls at? Where they at? Because this bounce is just a liquidity bounce. This is not bulls buying. These are the sellers that was in right here. That's them buying their way out of their position. So this is just sellers buying, buyers buying, FOMO buying. That's the reason why we got this little bounce right here. Now the bears could come back in right here. Oh, could come back here, like I said, or they might come back in this little area right here. But you can already see that they're trying to come back in here on the NQ. They're trying. but the bulls are basically pumping it up. So yeah. But we'll see. Just be mindful in this area. Just be mindful. I mean, I think the bulls are going to be successful, but just keep your stops tight. If you got some targets, take some partials off. This is a great area to take some partials off, and just leave a runner. Yeah, we'll see. We'll see. Says sometimes. I mean, that's the old Sherm. I mean, yeah. I mean, when you get in that stubborn mode, Alfred, yeah. I listen to Brandon. It's just sometimes it's beyond me. It's no longer physical. I'm no longer in control. The monster's in control. The tilt monster's in control. He's the driver of the ship at that point. Once it gets to that point to where it's like the market cheated you, and it's like for me personally, I have to try to see it differently because I don't want to say I take it personally, but apparently I take it personally when the market doesn't do what I think it should do, which sounds crazy, but hey, emotions are irrational. That's why the markets are the way that they are. And I'm not a type of person that will obviously respond positively to if I feel that I'm being taken advantage of. I'm not that type of person, so I'm always react this way. What I have to work on is recognizing that this is happening and try not to be so stubborn. And that's why I said yesterday, moving myself to break even was growth for me personally, because obviously before, y'all knew that I would have let that shit hit my stop before. But just moving my stop to break even was like, even though it was kind of difficult to do emotionally, I just knew that it was the right thing to do because I was like, well, if they come back here, then they're gonna come back and take out that high. I know it, but emotionally it's kind of hard to do what you need to do when you're in that tilt mode. So that's great. But I think we're slow. We're slow. And so it's like hit that. And I appreciate that, Alfred. I mean, shit, we provide a lot of. I mean, this stuff that we're providing to y'all for free is shit. People charge for this, man. A lot of money for this. And y'all getting it for free. Hey, yo, congratulations on that, Water Trader. Congratulations on that. So did you wrong with the? So you're saying that because so for Top Step X, I do see a lot of people talking about phantom trades. Is that really a thing? I have yet to experience that, thankfully, and I don't want to knock on some wood. But I'm starting to see a lot of people say that they're having some issues with Top Step X. Yeah, Katie, honestly, so with the journal, I mean, me and Smith talk about this before all the time. That journal is helpful, man. There was a time where I was on this win streak, and the only thing I was doing was writing in my journal. I got cocky and stopped, and that's when that win streak ended. My ego, the negative side of my ego, says that I'm better than my journal, and that's the negative side, and I believed it. I did not. I stopped writing in my journal, even though when I was writing in my journal, writing how I was feeling, writing out my trades, I was on this win streak. It got too easy. My ego said I was better than my journal. I stopped writing in my journal, and then my win streak ended. And then once I kept losing, I went back to my journal, started writing, and then magically I started winning again. And then my ego came right back in and said, "No, you're better than your journal." And I stopped. And then I started to lose again. It just seems like that's just I don't know if that's something that I'm subconsciously doing or if that's actually something that's really helpful. And what I mean by that is, I guess, writing out my thoughts and actually seeing them and analyzing, okay, so this is what I was thinking during this time. Before I entered this trade, I was scared that the market was going to hit my stop, even though I got in at a good area. And I would record how it was feeling. And once my target or hit got stopped, which honestly, more often than not, my targets got hit, I would go back to my journal and see that, damn, I was sitting here telling the market that it couldn't get to my target. I was telling it that, damn, it's not going to do this, it's not going to do that. And then you look at the charts and be like, damn, it did exactly that. It did exactly that. And how you feel in the moment can feel so real, and it becomes your reality. And then once you get to the end of the day and you look at the charts and be like, damn, I was so wrong. It's like, how was I so wrong? Why did I feel like the market wasn't going to do this when at the end of the day it did exactly this? So writing in your journal does allow you to reflect on your past thoughts, think the stuff that you was thinking about in the moment, and you can reflect what you was thinking to what actually happened. And over time, you'll see that, you know what? You don't have control of this market. The only thing you can do is take a good trade. You can plan for a trade. You can plan to where you can get stopped out of a trade, and you have to respect that stop. Because if you don't, well, I learned out the hard way when I kept moving my stop with that CL trade. I could have got out for a $270 loss. I got out for like I think it was 1,800 because I was so damn stubborn. I think I lost $1,800 on that trade, and I was only supposed to lose two. It happens. I mean, I was so angry because I was like, well, what the hell? What happened? That when the tensions was rising with Israel or something crazy like that, and they said something about a peace talk, um, which is good. I mean, I'm not saying that it wasn't bad. I mean, obviously, I don't care. Obviously, I would want, for a peaceful resolution in that situation. But in that trade, the price actually ran away from my target and it almost hit my stop. And when I looked at the charts, I was like, damn, I think I was like 20 points away from my target. And I was like, it's going to bounce. It's going to bounce. I'm just going to have to move my stop, add to the position, and hopefully it will recover. And it didn't recover. That shit dropped and it kept dropping. And I kept adding and I kept adding to the point to where I was like, shit, I lost $1,800 and I was only supposed to lose two. So, and then the next day, CL did that mega pump up where it pumped up $4 in a second because of um, the situation where they said that they heard a bomb or something like that in Israel, wherever the hell they was talking about. And then my target got hit plus some. So after that, I was like, I'm just going to stop trading CL for a while, at least until all this craziness, because if you trade something like CL, geopolitical issues affect it a lot. And then she moves away from the technicals and she becomes irrational. So going back to the point, respecting your stops, journaling your trades, reviewing your emotions, that's what's going to help you become a better trader. You're going to be more consistent that way. You'll keep your account longer, and you can sit in trades like this and consistently make $600 or $700 to $900 daily. And if you do that for what, 30 days? I mean, where's my phone? I mean, I know with the MFF, it's a 14-day period. So if you can make $900, or let's just say $700 for 14 days, you're at $9,800. $9,800 by that 14-day period that you can withdraw from MFF. So it's definitely doable. But right now, since we're slow, I'm going to actually just kind of document this trade a little bit. Okay, so today is the 8th. And, so the market made a downward move at the pre-market, touching an area of touching an earlier demand. Yesterday, I was looking to get out of my short position in this area, but we did not get it yesterday. What area was that? Because yesterday I was actually looking to get in at 196. So the demand area at 196 would not hold. So I chose to set a limit at 188. Okay, so I didn't make any mistakes. I did not make any mistakes with this trade. Make any mistakes. I followed my plan. Followed my trade plan. What did I do great? I followed my trade plan. And I also planned what I would have done if price actually came back. Yes. Okay. So yeah, that is something that I'm going to start to implement in my trading style. Just that preservation of capital, protecting my capital. So once you get that first target hit, I believe that's when you should move your stop to at least break even, if not even possibly trailing the position. There's no reason, once that first target got hit, there's no reason to allow it to go into the negative to fill that resting order that I had at 183, I think. There was no reason to go red on that once that first target was hit. Now, if my first target didn't get hit and price needed a double bottom and that second order got hit, that's what it's there for. It's there to, if my original entry doesn't get hit, it's an opportunity for price to go lower, for me to buy as cheap as possible, and to add more or to add more to the position. And even if that second target gets hit, it's a $500 loss altogether. So I can accept a $500 loss if I'm net raw. I have like 10 or 11 points of risk, and all that adds up to $500. So it's not, and what that does, at least for me, it allows me to know that, okay, I have about like 10 tries, at least. What is it? I got 4,500. Yeah, I got like 9 tries. 9 tries to get, I have 9 times until I fail the combines. I don't think I'm going to be ever wrong 9 times in a row. That would just be crazy for me. I would have to really sit back and think about, well, shit, do I actually know what the hell I'm doing? But you got 9 tries. And if you think about it like that, if you manage your risk, manage your trade, understand that you have 9 tries, like even if you get one wrong, you still have 8 more tries to get everything right. And if you don't allow your emotions to overwhelm you, you can be consistently profitable. So let's see. So on the ES, yeah, we'll see. We'll see if they'll break this. Because if we can break this, we can definitely get back up to like 212, 213 on the ES. And on the Nasdaq, we can definitely see at least 220. At least 220 on the Nasdaq, unless the bulls come here at 190, like we spoke about already. Excuse me. If they come back at 190, which I think the bears are going to fail because they're weak. Yeah, but kind of going back to this reinforcement for myself. We're just gonna start trading our plan, man. Trading our plan and not taking unplanned trades. If we didn't plan for it, we're not going to take it. Let's put that in bold in caps. If we did not plan for it, we don't take it. We didn't plan for it, we don't take it. Oh, okay. So I think this will be my only trade today. Oh, go ahead.
I was sad. Did you hit your targets yet?
Maybe.
Look at you. Thank you. Wow.
I'm gonna move my stop up. I'm up 20 points on this trade. Got one more piece left on this. I'm gonna put this. No, I'm gonna trail it. No, I'm gonna follow my plan. I'm gonna trail this. I'm gonna trail it. But this is a good area to possibly take it on. This is a good area. So what I will do is I'll put it underneath this candle, this 21 EMA. All in all, I mean, this is a good trade. This is a great trade. Great trade. We don't need to take any more trades in this account. We've made our money for today. And we can just come back in and we'll do this again tomorrow. And honestly, I enjoy how this turned out. I actually do enjoy trading this way. So, but on the NQ, yeah. So so we got over this area, and now the only thing left is this area right here, above these highs. And I kind of figured that's what the market wanted, above these highs. It would be crazy if they allow the market to take this out. It would be crazy. All right. But yeah, I think I'm done in the journal. I'm done running in my journal. I'm not going to take any more trades. I'm just going to allow this position to run. You want something right now, Smith? Damn, really? Alfred, I didn't know that. So they don't have a payout cap? Is that on the expert or is that on the starter? And you only get trades like this when you're not in freaking minis, man. Well, never mind. I get trades like this in minis all the time. But being comfortable in a trade like this. I'm gonna wait for this candle to close. Yeah, I saw that, and I got all mines as consistency, or not consistency, but as starters. And yo, congratulations on that target getting hit on gold. Actually, I'm not gonna set up a chart for gold. We're gonna look at it on the because I tried doing the gold thing too. I'm not gonna lie. I tried gold for like 2 seconds, but I realized that, man, gold don't move unless it's trying to move for real. Okay, so yeah, definitely if you got in at this low, yeah, that was a great long, especially if you got in at this low somewhere. Where'd you get in at, water trader? You say you don't trade it often? Yeah, I'm starting to, I found out that gold is just, I mean, when Powell's speaking, gold is good. When the dollar is dropping, gold is really good. I mean, gold is good when they're talking about inflation. When you get like inflation data coming out, that's when you want to get into crude and gold and stuff like that. And then you have to get out of it once the data releases because it's gonna reverse. But when did this happen? On Wednesday on the 8th. And gold, I mean, because it's a commodity, I mean, technical analysis work great on gold. It works super great on gold. You have to wait on it, but it works great. But it was too slow for me. See, I was like, dude, I can't trade both CL and gold. I can't do both. It's like both of them will kill me with boredom. Like, god damn. It's like one ain't moving, the other one ain't moving. Nobody wants to move. So I wonder, how far could this go? We're gonna trail this stop. Mm. So you got bored and checked on it. Mm. Yeah, I'm gonna trail this. We're gonna lock in a lot of this profit. We're not gonna let this shit come back. All in all, this is a great trade, man. Great trade. Low risk, high reward. All right, we're out of that trade. That was a good trade. Great trade. Great trade. I'm gonna cancel this order right here. We're not gonna overtrade. And at this point, what I'm gonna do, because we got out of this trade, I'm just going to, because I'm not gonna be in nothing, I'm just going to monitor and call stuff out. Hey Smith, are you still on the call or maybe he's muted? He's probably muted. But yeah. So this is something to look out for on the NQ. We got this range right here. We got this range. And in order for the bulls to continue to push price higher, obviously we all know that we need a range breakout. We need a range breakout. And because this is an NQ, we know that these highs don't matter for real. But honestly, I think this may be a strong high. I think it may be a strong high. And then obviously we got this range right here. So for the NQ, the bulls definitely have their job cut out for them. They need to break out of this range first. They need to train it to this range and break out of that range. We need to take out these highs. And if they do take these highs out, we may get a reversal or we may continue to break out of this price area. We'll see what happens. Bulls got a lot of work cut out for them. Let's look at see what Bookmap is talking about. Mm. Oh yeah, you know what? Maybe that's how I should do this. No, I'm not gonna do it that way. There's no point doing it that way. Shit, actually don't matter. Yeah, so at least for the ES, and I guess the NQ as well. Like I said, I mean, there's orders sitting like right here, and there's orders sitting right here. So price is literally sandwiched on the NQ, and this is the same for the ES as well. So both the NQ and the ES both have orders just sitting right above, and that's why you see price just ping ponging back and forth. To the bulls, yeah, I'm starting to see that too. I'm starting to see that. I'm starting to see that both sides are kind of weak. I mean, if you're a bear, let's be real. This short right here was stressful. I mean, unless you got in right here and you held the position, this was a stressful short because I remember when the market opened, and I think it was around, and I saw that it hit resistance. I almost went short. And you already know why I almost went short because I was about to straight tilt trade, honestly. But I was like, nah, just let the market set up. And then once I woke up this morning, I saw that price was sitting right here, or it was like around 10 o'clock or something. It was like 10 o'clock, and price was sitting right here. But I guess, or this is the NQ, my bad. This is the NQ. But good thing I didn't though, because here's what I told myself last night. I told myself to just set my limit right here at 18 because obviously there was a resistance at 18. But I said to myself, I was like, man, these bears are just super weak. And I would hate to have taken this trade, woken up, saw that I got stopped out, and then it goes down. Because I was going to do it in minis, and you really don't have too many room for errors with minis. But I was like, no, I'm going to wait. I'll wait until I'll see what happens overnight. And once I saw that price was on its way down, that's when I was like, okay, I know price is going to probably come down back into this area. And that's when I started planning for this trade. And that's how I was able to get all I was able to get. But so if for those that's looking to short this right now, if you're thinking about this is a good short, I would agree with you. I would definitely agree with you. The only thing that's concerning about trying to short it right now is that you have all the EMAs right here. And you have the 200, the 21, the 50, and you have VWAP all right here. And you already know we would need a strong close below all these EMAs. We would need a strong close. And I don't think we're going to get that because, as you can see, yeah, we got this bullish move up, but we came back, and this is the breakout. So we got that breakout, we got that retest, we got that move up higher, and they can possibly try to come back in right here and try to buy this somewhere. I mean, obviously, I'm just using this line as an example. Let me do this like this. The bulls can try to find support somewhere in this area. Now, if the bears want to be successful, this is what you have to do. You would have to do this to be successful as a bear, which honestly, I don't think the bears are strong enough to do this. I don't think they are, but I mean, they can prove me wrong, but I don't think they are. You was gonna say something, Smith? Okay. Actually, let me look at this real quick on the NQ because right. Properties.
Yeah.
Yeah, I'm not gonna do that. I'm not gonna do that. And NQ06-24. NQ06-24. Okay. And you see what I was talking about this about being a bear, and I think this is how they like to try to trap bears for real. I think they're gonna try to trap bears in this situation. We'll see. We'll see if the bears are gonna be weak. And just like the NQ would need the NQ would need to really break VWAP for real for real. I think they're gonna probably try to trap bears in this situation again. In order for this short to work out on the NQ, you would need a strong close right here. And not a close that does this, where it does this and then it gets immediately bought up. Because if that happens, then you should know that you're on the wrong side at that point, or you're too early. And in both situations, you don't want to be too early for real, for real. But let me look at this on the NQ, because we got this move up. We got this basically our beautiful 100-point plus move. I would have got that. We got that bottom.
Definitely,
You said what?
definitely don't want to be too early on the NQ. That's sometimes my main problem. Is I'll see it, but then I'll be too early. I don't wait for the prime entry.
Mm-hmm. Yep, and that's what's key, man. That's what's key. That is definitely what's key. And honestly, that's kind of crazy that did that. That's kind of crazy that it did that.
Honestly, if I would need it in order for me to trust the short. I would have to see price get under 180, 175 ish.
Hmm.
And I would need to close strongly below that in order for me to even feel comfortable at least taking it back down to VWAP or maybe further. But yeah, the pattern on this 2K chart looks like it hasn't broken the trend yet.
Mm-hmm.
So we might crack this high. And
Might. Might. Thank you. We talking about. Of course, she's touching the highs. Thing like the ES that ain't did shit yet. I'm just playing ES. Yeah, whatever. But that was a good trade.
Yeah. It's been in overbought territory for a while. So we look at the 5 minute. Dang. It just ate through everything.
Yeah. That's why I was like, man, we gotta trust these technicals, man. These technicals will tell you. And as I was reviewing the trades yesterday, and for those that showed up to the NA meeting, I was kind of talking about, I think it was not yesterday's meeting, it was the other day's meeting, but even though our hearts would tell us that, man, price is too high, blah, blah, blah. Yo, the bulls, like, look at this move up. The bulls have not failed. This entire move up, they have not failed. Not. The only, like, this is the most bearishness that's happened. So yesterday afternoon, this is the first time the bulls failed to take price higher. The first time out of this entire trend up. This is the second time that they've failed to take price higher right here. But obviously you can see that they're recovering. Now they need to take out this high and they need to take out that high. And we can see a move up and we can begin price discovery at higher prices. But yeah, these charts don't lie, man. They don't lie. Regardless if we like it or not. Maybe I could have stayed in this this trade a little bit longer. It says heavy resistance at 220 for the NQ. Yeah.
So all of that, and we up about 20 points on the day.
Yeah, this is about being like, ain't nobody worrying about these weak bears, man. Y'all ain't gonna never see me take a short ever again. Nah.
Yeah, okay. I'll be the bear for you.
Man, these bears are weak, yo. They're weak. Nah, I'll take a short if it makes sense, but honestly, nah, I'd rather be a buyer, yo. I'd rather be a buyer. Especially when price goes on these bull runs. That's why, so at the start of the stream, I bought 0DTE puts. I was able to be profitable on them. I think I bought those, yesterday on stream? I bought 413 or 513 and 510. I just closed both of them. I was like, I ain't playing that stupid shit. I'm glad I'm profitable. I'm just gonna cut the trade because these bears are weak. They're just weak. I did leave my put for Friday to run. We'll see if these bears come back in. We'll see. I'll close it on Thursday depending on how it's performing. Right now, I mean, I am profitable on it, but we'll see. We'll see. We'll see what the bears do. It says Water Trader says he loves bears and bulls. My theory still stands. I'm still sticking with my theories. All the bears got killed off, went extinct during that 2020 run up. The only reason why the market goes down is when bulls take their profits. That's it. There ain't no more bears in this market. That's it. But yeah, we got to sweep it this high. I mean, honestly, when I switched over from trading the NQ from the ES, this was the biggest thing, the biggest hurdle that I had to actually accept trading the ES. It's like, man, these highs don't mean shit on the NQ. That's just liquidity for her. She was like, yeah, I'll come back and get that later. Let me hurry up and take out this. Let me take out this low. Yeah, she almost took it out. Let me take this first. Let me pump back out and take out that liquidity. And because I'm feeling cute, let me take out that liquidity and then I'm gonna come down. But the ES don't do that shit. And I would have been out of this trade if I stuck. I mean, I got out at what, 10? So I left 2 points on the table. It's not a bad thing. It actually might continue to go up to 218. It may continue to go up to 218. which I left 8 points on the table. But yeah, we might get that push up to 218 possibly. We'll see.
I was like 218. I thought, oh, you talking about the ES.
Oh yeah. Yeah, the ES, you know how it is. I mean, shit. NQ already touched hers. She touched her highs already.
Yep, still making them.
hmm
Still making new ones.
She touched hers. And so now the next hurdle for the ES, or not the ES, the Nasdaq to do is to trade past this range, which it may be hard for her to do. She has a challenge. When she gets to this 230, 240 level, it's going to get challenging for her. But we all know that the NQ loves challenges. We all know that she does. So we'll see. We'll see if she'll be successful.
Do we have any?
Oh, yeah, we have. Oh, shit. I forgot. My bad. Go ahead.
I was just checking if we had some.
Yeah, we do.
News.
Yeah, we do. I forgot about that. We do. I'm about to pull that up right now. We do got some news today. Well, it's not news, it's in a market event. Okay. Anyway. Okay, so I don't know what that is. No. We got Fed Speaker Jefferson and Collins, and I forgot which one is actually a voting member. We have that at 10 o'clock in the next 10 minutes. Ah, God damn, I should have stayed in my short, in my long. But we have one of these is a voting member. I think it might be Collins, if I'm not mistaken. Let's look that up. I think it's Fed Collins is a voting member. So whatever Collins say, you already know that the market's gonna react to it. Voting Fed members. Who are the current? So Jerome Powell, John C. Williams, Thomas Perkins, Michael Barr, and Mary Collins. Yeah, it's Mary Collins. Unless this is unless they updated this or they haven't. Yeah, don't you just hate that, Alfred? That's something to put in your journal, man. More items. Membership.
Oh, how's CL looking since that news drop just came out?
Mm.
You at CL?
Yeah, it's Collins is a voting member. Collins is a voting member, so we might see a reaction. Might see a reaction when she speaks. So I'm gonna jump into this is gonna be the play account. This is gonna be the play account real quick. This is the play account. I think let's see. Let's see if we can get a retest of this area. Let's see. Let's see. That might have been a drop right there. That might have been it. Damn it. That might have been it. I think this is where the market was trying to get to. Because the market loves this 218, this 217 area on the ES. They've sold off at this area. Well, they got to 220, but once, twice, they used it as support. They sold it again. They came back and sold it. And I think they're trying to do it again at this level. We'll see. This is the one thing I do like about Top Step X is this volume profile. You can kind of see where the orders are sitting at. I mean, everybody has this, but for some reason, I like looking at it on Top Step. It's right in the DOM. I mean, it's like that in NinjaTrader as well, but I guess I just like Top Step's DOM for some reason. I don't know why. I like the simplicity of it. Even though it's very simple, it looks really good, and I like the fact that I can do this. Yeah, the DOM. So this is not a. This is just going to be a play trade, guys. I mean, this is a play trade. This is a play trade, but I'm not taking a play trade. I want to see if yeah, I think we can get that. Well, there's no volume right here, so I'll put it right here. We'll see. We'll see if we can get it filled, and we'll see if we'll see if the market is going to respect this area. Okay. Yeah, the way that it's looking, yeah, the way it's looking right now, I think this might be it. I think the market did this in anticipation of this Fed speaker that's going to be speaking in the next 10 minutes because she is a voting member. She is definitely a voting member. And we already see how the market reacts when they're not members. Crash Car, where were you yesterday when the Bears needed you the most to say something crazy? Where were you, Crash Car? Where were you?
Hey, I still owe him a beatdown. So.
Oh, he's hiding from Smith. That's what you're saying. He's hiding from you because he
Yeah.
didn't show up yesterday.
Not only me, he pissed off a lot of other people too.
Especially on World Star Bets.
Oh yeah.
Damn.
They went in on him.
Mm-hmm.
What time? 55. This might. I mean, this looks.
It looks bearish. It looks bearish.
But I don't know. I wouldn't want to.
Short it.
Well.
I mean, it is a good short. It's just that these bulls are these bears are weak. My bad. Go ahead.
Yeah, but I mean, there's different indicators that's suggesting to short this, but if you look at just the chart pattern itself, it hasn't broken the structure yet.
Yeah.
It hasn't broken the structure. So I wouldn't be super confident shorting it right here. But there's other indicators suggesting that this looks like a good short setup, but the structure on the chart, and I think really that's probably the most important.
Yeah. Yeah. Yeah, we talked about this. We talked about, and this is the ES. We talked about, actually we didn't talk about this on the ES. But price is in this range. In order for the bulls to be successful on the ES, we need a breakout. And we need a strong breakout. And we all know that the ES don't break out for real. She don't do that. She don't do that for real. Now, if the bulls come back here, if we can get underneath this range and we can get some of these bears to sell and the bulls are just waiting in this area, then I can see price trading through this and breaking out. But right now, a quick short scalp, it will probably be the best option.
That's exactly what I was going to say, especially for NQ. Like if you're going to short it, maybe short in the 220s, and then definitely put some protection on it, let it trail.
Yeah.
And see, because the structure, like it can go down. Honestly, if I'm looking at this,
we can see a move down to at least in this area. We can see this because there'll be a break of this range right here. You said what?
Yeah, I was gonna say like maybe 170. It could go as low as like 178-ish, and still be in this valid to continue upwards. You know what I mean? Like, but the fact that it's been pretty much bouncing off this 9 EMA, because I use 9 EMA and 21 EMA are like my main two to look at the like the structure basically. If it's bouncing off those, and let's say it breaks the 9 EMA and it's trying to head to the 21, and I've seen it plenty of times. It bounce off it breaks the 9, and the 21's there to support it, bounce the 20 off the 21 and keep continuing on in the direction. And then, you got your 50, 200 and all that. But right now, like I said, this is still in that, like I said, that short we were just talking about a few minutes ago, scalps.
Yeah.
If you're trying to be risky and be quick, just get a little bit of profit, I'd look for scalps. But if you want long term, I think I would wait for it to.
Yeah, I definitely agree with you, Smith. That's actually, yeah.
Oh, nice. That's what D-Water did. Yeah. See? Yeah. Okay, if he shorted at 220, and where did it get low to? It got to what?
12. That was like 8 points.
Yeah, scalps, baby. That's what I'm saying. Like, it'd be risky to go heavy in that short right there.
Yeah, it definitely would be. Because it's looking like they're going to try to bounce it here. Because they're finding support here at the 21. Yeah, they're finding support. I mean, in order for you to be successful, they need to break this.
Okay, yeah, I see. So I was just looking at my 5-minute, talking about that area. On the 5-minute, they haven't even broken the 9 EMA. And when I switched to the 2K, it kind of, like you said, it bounced off the 21 and looks like it's trying to push back up.
Yeah, I mean, this is like, I think I've kind of gotten over it now. These EMAs are here for a reason. They're here to protect us.
Yeah.
They're here to protect us from our foolishness.
Yeah, that's what I'll be using them as like a guide, like for the structure basically. And if it breaks, hey, all right, you're no longer valid anymore. Especially if it breaks. Like, if it's bouncing and just continuing off the 9, then you know you're super good if you're in the right direction. If it breaks the 9, it's like, okay, next one is heading to is a 21, and it bounces off of that. It's like, all right, I'll stay in my position then.
Yeah. So let's see. Like I said, this is a play trade on the Top Step X. I don't necessarily. No! Why would you do that, Is? Why would you do that? So this is what I'm gonna do. I mean, I guess I could. I mean, why not? I guess I could. Nah.
Go to 230. Yeah, 230 to what did it get down to? Got to 212, 212.25. I mean, yeah, that's a good little scout. If you took that and got out right there,
Order filled.
17 points, almost 18.
Honestly, I think this can get back down to. That would be crazy if we get back. I mean, it wouldn't be crazy, but man, that would be a move right back down. Because, this is. I'm going to do it. I'm doing it, dude. I'm going to do this. I'm doing it.
You gonna test it out?
I'm doing it.
See some supply on the 5-minute on NQ into the 250s, 260s.
Colin's gonna say something stupid. The market already set up for her to say some stupid shit. She's gonna say some stupid shit.
I haven't even looked at. I haven't looked at Bookmap at all today. At all. And Bookmap, I mean, it's a useful tool. It gives you like clues. See where heavy orders are sitting at. But I see maybe it front runs it and we don't get up to the 250s. But there's supply sitting there. Yeah, it's dropping now. But
yeah, I think we're good in this short, baby. We're good in this short. We good. Yeah, the market set up for her to say some stupid shit. She's gonna say some stupid shit. Watch. She's gonna say some shit. Yeah, we're not doing shit about inflation. Y'all think y'all gonna get a rate cut? Y'all ain't getting shit.
That's funny because I saw an article saying some bank, I forget who it was, talking about, oh, we could still see these banks are thirsty for a rate cut.
Yeah, I mean, shit.
They were like, we still see potential rate cuts in September. Okay, keep thinking that if you want. As long as they stay the way they are now, or if they get worse, I'm like, yeah, all right. Yeah, all right. Who got that hopium now? Thanks, man. I'm like, Jerome Papa Powell is not doing that.
Who's that? Is that Pumpkin Powell's brother or something? His father? Because all we know is Pumpkin Powell. That's all we know.
So y'all gonna need him to come save y'all, because this dude is not. Honestly, remember we talked about how they changed the definition for the recession?
Yeah,
a while ago. I'm like, how are you just gonna change? Because we would be technically in one. The real ones know. We already talked about this before. The real ones know. I'm like, how are y'all just gonna change the rules on the definition of a recession? Be like, yep, no, we're good. We're not in a recession. See, look here.
It's like, yeah, we're just going to change the definition. It's like, technically, we're not in a recession. Okay, God. And you go and spend your $10 on your carton of milk. Yo, in Florida? Well, I was at a gas station, so I'll give y'all that. But, the milk was $10 there. I was like, what the hell? I just needed it for like 2 days. I was there for on a trip to Disney World. We just needed some milk. And I didn't feel like driving to the store. And I carton milk was it was like a half gallon too. I was like, yo, what the hell?
That's crazy. That's insane.
Yeah, it is. I spent the money though, because I didn't feel like driving to the damn store. I was just saying, bastard gas station, $10 milk, bastards. I said, better get some almond milk. Yeah, they had them at that gas station.
I'll be more expensive.
Hell yeah. Oh, you want to be healthy? You want to be health conscious? Yeah, that's gonna cost you. It was hard for us to collect those almonds and squeeze them and milk them. You're gonna pay for every second of that. Well, hey, at least Water Trader, at least you stopped out at break even. That's the best thing. That's the only thing that matters. You protected your capital. That's the only thing that matters. Nvidia helping the short. Yeah. I mean, I guess they could. Yeah, they'll probably come back in here, like around here somewhere. Hopefully they don't, for the short to be awesome. Yeah, baby. Yeah. 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 All right.
She said something.
She probably said some stupid shit. I mean, we got to drop. Actually, let's do this real quick. Let's do that.
I'm looking at it in the Discord.
Are you?
Yeah, military.
Oh, oh yeah, from the financial juice.
Yeah.
Or I guess I can find it. I mean, maybe I can find it. I can find it. Oh yeah. Oh hell yeah. She look like she don't play. She look like she don't play. She gonna say something stupid. But yeah, fuck y'all rate cut. Y'all ain't getting it. She don't play. I mean, based on how she looks, I think that because is either they're dovish, hawkish, and I think there's in other terms like they're centric or neutral or something like that. I'm gonna assume that she's not gonna be hawkish. I feel like she'll probably be more like Jerome Powell. She'll tell you the truth. Well, not necessarily like they're lying, but she'll kind of be more straightforward instead of hiding their intent behind their academic words that a lot of people don't even really understand for real, or their Fed speak. They say one thing and they're not lying to you, but the market can interpret what they're saying how they're going to interpret it, and that's out of their. I mean, they can't control that how you interpret what they say. But the real ones know.
And being willing to take those opportunities, to take those risks that might
he looks dovish as
serving
fuck.
you well later on.
Thank you.
He looks dovish.
So I know you mentioned a little earlier that you prioritize health, exercise, that wellness in the mornings after lunch. I've heard from CEOs, work-life balance, work-life exchange. At different points in your career, maybe work is a little more dominant than personal. How else do you maintain a sense of balance and satisfaction amidst the demands of your leadership role?
Oh, shit.
Yeah, so I want to say a little bit about work-life balance, because what that has turned out to mean for me is that over some period of time, your life may seem out of balance.
Dude.
Okay, you say, okay, this week I got to focus on this, okay?
Correct.
And it turns out that that is true in your professional life also. It can be true, or it could be true. And so really what I try to engage in is an understanding of the demands of the moment and what I need over time, right? So if over the course of a month I can have some kind of balance, that's good. And
that was
then
diabolical,
there
Alfred.
are
That was
maybe
diabolical.
periods of time in which the work
Hey, you remember
is such
what
that,
Alfred just
wow, on a daily basis, I can't
Oh, I
keep
see.
things in balance. So what is
That was
the
diabolical.
counterbalance to the stress of my job? For me, it is having fun, right? So I enjoy traveling.
But I don't have
I
time for
have
that.
a little hobby in
But I'm
terms
gonna talk about it.
of trying to learn Spanish. That
What the hell is even being said right now?
mixed
Why the hell do we
level
care about
success,
this?
okay?
Okay.
But it's something. So I have a program.
You're a
an
Fed
app
speaker.
I
No one
use,
cares about that shit. We
Duolingo. You all may have
want to hear you talk
heard of
about
that.
money.
Okay, so about 15 minutes a day, I always do Duolingo. I'm on an incredible streak now, okay? Over 13
Yeah, like what they talking
days.
about,
So
dude?
I think,
No wonder why the market is dumping off. It's like, what the
pretty
fuck these guys
impressive,
even talking
and
about?
it's just a diversion, right? The idea of me learning Spanish is pretty far-fetched. But I like to amuse myself in that way. And so
They
some
not
people
like
do
us.
Wordle,
They
some
not
people
like
do,
us.
so for me, it's Duolingo. And so I try to have those kind of distractions in the day that help me to relax.
Yeah,
and
Katie,
then
I
when
don't know
have
what
to
the hell they're talking
focus,
about. He's talking about what his
I'm
day to day
able to
is like.
focus.
Right. I'm sure
The
you.
market doesn't like exercise.
Well, we'll see this summer. I'm going to Costa Rica, so we're going to see how that works out.
Well, you're going to need to.
I mean, technically, everybody that's trading right now is in front of some sort of computer.
My twinkle, twinkle,
Yeah, with
little
their
star is
chair.
still pretty poor, but we'll get there. Can you share a little bit with us about your
Oh, man,
leadership
good
style,
short. Man, that 230
particularly how you
short,
go about mentoring colleagues who are earlier?
would have been nice if you were able to hold on
Whether you
to
have
it.
more or less time to do that.
What happened to it? Let me
Well,
look.
I
Ah,
Hindsight,
shit.
obviously.
to
Ah,
work
damn.
with
Yeah, the NQ does that shit.
people every day
Yeah,
here
yeah.
at the board.
Damn.
And I believe that my leadership
Yep.
style is very collaborative. It's very inclusive. And I think that leadership very
Using them
much has
social
a
justice
service
words.
component. So when I'm interacting with my colleagues,
Whatever they
I
talking
really
about,
want
the market
to
is like,
trust
you know what?
their expertise.
After
In
this,
other
let me
words,
sell my positions.
we're fortunate here at the board to have a very talented staff. There are individuals in all parts of the board who know way more about specific
All right.
areas of expertise than I do.
Well,
And
see.
so as someone who is in a leadership role, I want them to feel safe to share their expertise with me.
Yo, he sounds
So
like one
I
of those
like
damn
to
commercials that,
ask a lot of questions.
you know, when
I like to get their recommendations.
you get hired and you got to watch some
And
stupid videos.
I believe
Yo, that's what he sounds like right
that
now.
over time, that's a way of building trust, because if they feel as though that I trust them and their judgment and their expertise, then
All right.
they will be
Order
more
filled.
willing to
First target hit, baby.
their discretionary effort into the activity.
we had the 21, the
that is
200,
the
and the
definition of the
23% fib.
So I really see my
right where
leadership
price is
style
at
as one
on my
of
5-minute chart. So
trying to facilitate their professional growth, trying to
Make or
encourage
break.
collaboration so that they are able to
the
contribute to
23, man, for some reason, that
board,
fib level just
in as fullest a
Hitting,
way.
yeah.
it'd be super support or
Sounds
super
like it's
resistance.
great working with you.
Well, you would have to ask them. I don't know.
It takes some effort to break these.
I don't know for sure.
Definitely. Well, I also wanted to move on to additional advice. I know I think you're full of it, but like full of advice. But
I think they got
Oh,
it.
she said,
well,
she said, you think you're full of
Please
it. She meant that
forgive
shit.
me.
She meant it. She meant
oh
it.
gosh. Well, in other interviews,
She
you
meant
have
that shit.
stated, that it's important for public policy. To
Yeah,
hear
I mean, they
voices
took
that
Uncle Ben
represent
off left to right, show.
And that sometimes
I mean, we're not going to talk. Well, I mean, this is how far we'll go.
Can feel like a very
I don't get into stuff like that. I don't care. Honestly, but someone did bring up a good point. I mean, the social justice people went so hard that they basically got all minorities that represent rice or whatever they represent on food. Now you don't have those guys on anything anymore. They took Aunt Jemima, like Aunt Jemima wasn't happy and shit. She was smiling on the syrup bottle.
So
she was happy.
Advice I can only.
She was happy.
It could be useful for me.
She was happy.
What has motivated me in the profession.
Order
knowing
filled.
that it could be different.
All right, we got one. We got one. We're gonna move our stop to break even, baby.
So at one point in my
gonna move
life,
it to
I was very
break
much
even.
like you in thinking about what I might do over the course of
Aunt Jemima was happy on that syrup bottle,
and
they took her off that shit.
I was lucky, I think, to take Econ 1 as a freshman in college. And what it did for me was open up a new way of looking at the world. And if you think about it as sort of putting on a pair of glasses, I was
this guy is fucking delusional, dude. This is a Fed? This is a Fed? Yo, this guy lives in a fairy tale land, yo. Like, that's not how people are for real. Like, yo, that's not how people are. Nobody doesn't care about none of that shit he's talking about.
DC, and it was always some things.
It just sounds cute to say. That's it. That's something that you say at a press conference to make people feel a certain type of way. But no one really believes that stupid shit.
Learning about economics helped me to develop an understanding for some of the things that I'd observed prior in my life. And I then started. You
said a BE is a break-even button?
The questions that
oh, shit, I didn't know that they had that. Oh, shit, I didn't know they had that. Yo, thanks for pointing that out. I didn't know they did that.
I continued to follow that interest.
So that's a break-even button right here, for those that don't know.
The profession, it is one that I enjoy personally, but like many professions, it has challenges in that there has been a particular history with regards to who studies economics and who doesn't study economics. And I think we're at a moment now where the profession is aware
so they recently added it? Okay.
Of the kinds of questions that are asked about
I mean, we gotta give it up to Topstep, man. They are doing something.
Society,
regardless of what their intentions truly are, we don't care. What they're doing is helping out a lot of traders. That's what we should care about, regardless of what their intentions are.
Different perspectives.
Yeah, we're just
because while the questions may stay the same from generation to generation, people's lived experiences can be very different. And so we need different people at the table who might provide new questions or different answers to old questions. And that is something that I enjoy being a part of. And if that sounds like something that you would be interested in, then certainly what I think I would want to do and what the board is doing is providing an invitation for you to join in this process of helping this profession to be all that it can be.
Thank you so much. Can you talk to us a little bit more about maybe the importance of risks? You mentioned that or a little bit earlier about taking risks. Can you share with us maybe an important risk you took in your career and why, and what did it yield for you?
Yeah, so I think risk taking is important, but it's got to be risk that makes sense to you, okay? When we do things that take us outside of our comfort zones, it provides an opportunity for growth. And I want to use a personal experience in this regard. So I spent 22 years at Swarthmore College. I was a professor
This time.
with an endowed chair. I had been chairman of the department.
Auto trailer from
And
the
I could have stayed there for the rest of
the
my career and been
order
very
tab.
happy and very successful.
I'm gonna play with that.
But an
This
opportunity
is the
came
lockout
up
button
for
right here.
me
I know that.
to transition at Davidson College, to transition from being purely an academic to an academic / administrator. But it required me to uproot myself and all that I had built up in order to explore that opportunity. And so it represented for me a risk. Because one, I didn't know whether or not I would be a successful administrator and helping to run an institution. But I was at a point in my life where
Yeah.
I thought,
I mean, they could
if
possibly
I
come
am
back in
going
here at
to
VWAP. I do have
engender
this level on my
further
chart.
growth and
I do
understanding
have this level right
for
here.
myself and possibly
They
others,
may come
I
back
needed
right
to
here.
do something different. I needed to take that risk in order to continue to grow and learn, because I love to learn. I'm a lifelong student, and that's something that excites me every single day. I'm excited when I get up in the morning because I feel as though, okay, I'm gonna learn something today, and so that
All
is
right, y'all, I gotta
motivates
bounce.
me to take risks
I'm
that
gonna still keep
will
watching
allow me to
the
learn
charts though, just for
something.
study.
Thank you. Thank you
All
for
right,
sharing
Smith.
your thoughts there.
Appreciate you was able to join.
I want
And
to talk,
we'll probably end the stream
transition a
around
little
like
bit
11
more
o'clock
about
anyway.
building
So
networks within
we'll see
community.
how the
You've mentioned
how the market
that,
reacts
and
to
again, in
Collins.
previous
And
interviews,
she said
I
something
had a kind of
stupid.
chance to internet stalk you, which
Yeah.
is like my second favorite thing to do.
Yeah.
But you've had you've
All
had a
right,
great
y'all.
time
Peace.
building relationships
Peace
with
out,
colleagues
man.
across the field of economics. What advice or what can you share with students as they think about how they should go about building their own networks, for their careers and future?
Well, I think in terms of building networks, what's important there is that you believe that everybody you come in contact with has something of value to share. Okay, if you believe in their intrinsic worth, and you are open to the possibility.
All right, so let's see. I
That
mean, I don't know what the hell they're talking
that
about, man.
person could
Like
be a friend
that's
of
crazy that
yours,
they're not
right?
talking about
Now,
that's crazy.
that
So we
maintaining that
have
mindset
I don't think I can take
can
20 more
be
minutes with this guy.
challenging sometimes, okay? Because we
Yeah,
can sometimes
I
be
can't take 20 minutes with this
in
guy.
a situation in which
I mean, unless y'all
it's
want to watch this, I'll
stressful
keep it on. But if
and
not,
there
I
are
mean, shit, we can go
deadlines
back to the charts.
and
But
things
this
need
guy
to
ain't
get
talking about
done.
nothing for real.
And, we ourselves can be in a place where we're not open to all that could possibly be true in that moment. Let me just put it that way. So, but networking is really
good?
about
All right, we're
thinking.
good. Yeah, he ain't talking about nothing. I don't know what the hell he's talking about. All right, so yeah, I think that they may try to come in. We'll see. We'll see. Let's see if they can get it over that high. We'll see. I'll keep my stop right here so I can stay in this for as long as possible. But yeah, I'll keep my stop right there. If not, this was a great trade, man. That was a great trade. Great trade. We caught at least 7 points on this. Yeah, caught at least 7 points on this on E-minis. So you already know. So let's see what they're doing with SPY. Now, yeah, I'm kind of glad I got out as soon as the market opened because it bounced right. Man, this is why I was so adamant about getting out of this position right at open, because SPY bounced straight off of 15. What I thought that they was going to do, or maybe we can still get it. maybe Collins might come in and like I said, she may say something stupid. And SPY can actually probably get to 510. Let's actually put an alert for that actually. Because I do have a position that expires Friday, and I think 510 is my actual in the money strike, if I'm not mistaken. So we're gonna set an alarm. We're gonna see if SPY when it crosses over. Let's do 11 because 11 is good enough for me at this point. And we can touch into 11. That means something would have to happen between now and Friday for the market to trade all the way back down here to at least 11. Well, nothing that has to happen. We're just going to have to deal with if we don't have anything that's going to be volatile, the price action will eventually get down here unless they're trying to trade above these highs, which, like I said, I believe will be highly unlikely for price to trade above these highs because that would mean that we're a hop and a skip from all-time highs on SPY, a hop and a skip. And if we can break 20, there's no reason for the market to not shoot for at least higher. Yeah, I can see it possibly getting stopped at like 20, 22, 23-ish. Yeah, like right here. You can see that that was the right shoulder, and they may come back up and test like 23. Yeah, 23. Yeah, I can see that. Yeah, I can see 23 at least on SPY. I mean, that's if they can break that 20 level. But don't let this low volatile news week fool you. We do have CPI next week on Wednesday. And I believe between, if not Friday, Monday and Tuesday for sure is going to be the market setting itself up for the CPI release. And I think I got stopped out of my runner. Oh no, I still got a couple of points. Still got a couple of points. And like I said yesterday, this was something that I actually had to accept. Is that these EMAs, I mean, they're here for a reason. My initial thought is that price can trade through these EMAs. I mean, especially with the NQ, she does it all the time. However, these EMAs are like roadblocks. For those that's in this short, you would have to accept that they was going to buy it off the 20 or off the 200 EMA. If they broke past the 200 EMA, they definitely was going to buy it off of VWAP. And for someone like myself that likes to hold on to bigger trades, these roadblocks are kind of annoying. But we have to respect that they're there because you can see that the market definitely respects it. The market definitely respects these EMAs. So we have to really be mindful about EMA placement when we take our trades. I guess that William guys must be saying something stupid or something because the market is straight up dropping. We'll watch the Collins. We'll watch her because obviously we need to listen to what she's saying because she's a voting member and the market is definitely going to react to whatever the hell she says and we need to be prepared for that. So we'll watch that for sure. But that Williams guy, I can't take. He lives in a fairy tale land. I can't listen to that. All right, so the EMA is at 205. I mean, there is definitely demand at 205 on the ES. There's definitely demand there. And on the NQ, Yeah, wow, water traders. Yeah, that sucks, man. I mean, yeah, that sucks. That's why with the NQ, I usually trade the NQ. I don't even touch my stop. I just put my 27 points on and I just let the trade ride out. Because you just have to be that stubborn. Like, yeah, that would have been a great trade if you was still in it. 230 and it got all the way down. Yeah, that would have been like almost about a 60-point trade right here, almost 50 to 60. And let's do the actual math on it instead of just me guesstimating. 230 minus 167. Yeah, about a 63-point trade. Yeah, that's why with the NQ, I trade the ES differently than the NQ. I'll put my stop at break even with the ES, but on NQ, I don't even touch my stop at all. I will always just accept the loss with NQ for me personally because of stuff like this, because of how crazy she'll get. She likes to come up and do that drop, come back, and then she's so crazy and volatile. You don't know if this is actually a real move or not, and it's just too much thinking. I was like, you know what? I'm in at a good area. I got my 27 points of risk. I mean, I'll probably cut it if it's like super shooting up, I'll cut it before 27 points, but that's usually what the NQ requires. She wants that meat on the slab. She won't make it easy for you. That it ain't gonna be easy. So it ain't gonna be easy at all. Yeah. So I mean for the NQ traders, if you honestly, like I said, if you're new, you shouldn't be trading the NQ in my opinion. You can trade what you want, but I feel that if you're new, the NQ is definitely not an instrument that you want to start off with. The NQ is definitely, I mean, you've in the market, you've traded slower markets, and you've got a great feel of technical analysis or at least setups, at least. Because shit, you get caught up in a move like this move from the bottom. I mean, you get a move like this. How do you trust this long? How do you trust that? But I mean, once she's done painting her candles, she does follow technical analysis. She's crazy, but she's not that crazy. She's definitely not that crazy. You see how she got a sweep of this high? And when I talked about her not trading through this range, I didn't really expect her to trade through this range. I mean, she's crazy, but not that crazy. And as soon as she got up into this range, price completely dropped. And as you can see, she respects technicals. It's just it don't feel that way while you're trading her live, and especially when she's moving at a fast pace. Actually, did I get stopped out of that trade? I don't think I got. Did I get stopped out of that trade? No, I'm still in it. Yeah, I'm still in it. I thought it hit me. With ES, you can do this because she's not. ES doesn't do that crazy shit that NQ does. And this is how crazy it is. Look at that. Isn't that crazy? Like, isn't I mean, it's not crazy, but isn't that interesting that ranges on the NQ and the ES they match up with each other? It's this area right here is where the bulls found support on the ES, and this was the range. This is the breakout for ES. But anyway, kind of going back to this. Yes, she's not crazy. She's not that damn crazy, but she is crazy. And once we got a break of this high, sweeping these highs right here, they used the stops, the buy stops on these sell orders to push back up into this range and to push price right back down. And I believe that this is the rotation lower. I think this is the rotation lower. Because price is now, they got the 21 in the 50 trying to push price down. excuse me. You have the 200 EMA. That's what's holding up price. We definitely need to see what the bulls do at this VWAP. I think we've already displayed on this channel that VWAP is basically God on the chart. Price does what VWAP. I mean, if VWAP is sloping up, selling is going to be very dangerous. You can probably sell, and 9 times out of 10 it's going to bounce off of VWAP. 9 times out of 10. I mean, think about what the indicator tells you. It's a volume indicator. I mean, it lets you know that, like, look at this sell-off. It allowed you to know that price was selling off. And when people were buying, you can see that it was sloping up. And these indicators, they mean stuff. I mean, it's very important to adhere to what these EMAs are trying to tell you in VWAP. If you fight VWAP, you'll find out. You'll find out real quick. I remember it was a previous stream, and I believe I was in a long position. I don't know if I was that. Anyway, the important point is it pushed past the 21, the 50, the 200, and VWAP was sitting right here. And then price shot past it, and I was like, yeah, I'm super good in my long. And I walked away from my chart. And when I came back, all they did was overshoot VWAP. But when I said that after it overshot VWAP and price came crashing down, yeah. That's why when I see VWAP on the chart, I'm very mindful about where it's at, because it usually lines up exactly where previous demand is usually, and it usually lines up with previous supply. So if you fight VWAP, 9 times out of 10, you'll lose that fight. And I don't like those odds. Those aren't good odds at all. Yeah, I know, Mad Moxie. I know. I did it. I know. I do it. Like I said, I'm gonna fight. I'm gonna fight it. But it doesn't make sense to fight it, I guess, since I've turned over this new leaf and not being stubborn. But yeah, I've done it on both the ES and the NQ, and I've lost all the times. I've lost. VWAP showed me. All right, so we got this Fed speaker coming up in the next 5. It's going to start in the next 5 minutes, but I'm pretty sure they're going to take another extra 5 minutes to set up. So we'll see. We're going to listen to what she has to say. Gets into the way of progress. It gets in the way. So we got this break here on the ES. So we got this break. Then it came back up, and we may, I guess I think we may get that. We may get that move right back down, and it lines up perfectly too. Around that, yeah, that lines up. We'll see if we get that though. We'll see if we get that, because I'm thinking of this breaks back up. Looks like we're in a bull flag. Yeah, we may get this. Yeah, I would agree that we probably get a push right back up. Because 9 times out of 10, I mean, if it's a Fed speaker, they'll pump it. They don't get a Powell pump, but that's usually when you'll see that the market usually recovers. For like if it's in a downward trend, you'll see a recovery when the Fed is done speaking. And as I'm educating myself on monetary policy and what these bonds, so it's like it's just they have 3 names for them, like bills, notes, and bonds, and they all are based on like well, anyway, let me further educate myself on that because I heard it but I forgot. But I've already shared that these bonds are basically the government's taking out loans. But sometimes what the Fed will do is print money and buy these bonds themselves. So they're inflating the economy with this fake digital currency because they buy them themselves. And I'm like, what's the point of that? But it's that deficit spending that this economy is running off of. Once we started the deficit spending, unfortunately, the only way to stop deficit spending is if we have a big crash and a reset. Unfortunately, and we've already had our crash and our reset with the virus. So, I mean, I know that a lot of talking heads would say, "Oh, the economy, we're in trillions of dollars in debt." That's what's running our country right now is that debt, and the ability for the Fed to print its money. But in order for this game to continue to be played the way it is, the world has to accept our dollar as the dominant currency. And you already see that the world is trying to de-dollarize itself because other economies are, at this point, tired of being taken advantage of. Because as we all know, we have military bases all around the world. What other country has bases here in the United States? China owns some land here because we owe them money, so they do have land here in the United States that China does own. But there is no military installation here in the United States, but outside of Russia. But that's why Russia didn't really want the United States to move into Ukraine because so let me say this. I'm pretty sure there is an unofficial base in Ukraine, but there's not an official base in Ukraine. That's why Putin was very adamant about not letting Ukraine join NATO because he would literally have us right next door to him, right next door. So all right, so I think the market is preparing for. All right, so let's get this set up because they're preparing for her to talk, and I think I'm thinking that she'll probably like the market's going to set up. Let's see.
Still going to be there in an hour.
Yeah, I knew they was going to. Man, these guys are so predictable, man. Yeah, it starts up, but then they're gonna probably take them 10 minutes to set this up. So let's do that.
Oh. This is the lowest chair, but I can't figure out how to raise it up.
Good morning, everyone.
It doesn't matter.
Good morning.
You're being undermined.
Everyone, please be seated. I'm Edward Golding, the executive director. I'll start over. I'm Edward Golding, executive director of the MIT Golub Center for Finance and Policy here at Sloan. It is my distinct privilege today to introduce our speaker. Susan M. Collins is President and CEO of the Federal Reserve
Yep.
Bank of Boston, where she participates in the Federal Open Market Committee, which sets U.S. monetary policy. Since taking office in July 2022, Collins oversees all bank activities, including economic research and analysis, banking supervision and financial stability efforts, community economic development activities, and a wide range of payment technology and finance initiatives. President Collins is an international macroeconomist with a lifelong passion in policy and its impact on living standards. She has published widely and served as provost, dean, professor, research scholar, and board member of a wide variety of universities and organizations, including Michigan, Brookings, Georgetown, and Harvard. President Collins earned her PhD here at MIT in economics and also has an undergraduate degree at Harvard. Following her remarks, President Collins will be joined on stage by Professor Kristen Forbes for a fireside chat, followed by Q&A from the audience. So President Collins, the stage is yours. Thank you.
Thank you very much. And it's just such a pleasure to be here with all of you today. I want to give a sincere thanks to Kristen Forbes, who I have known for many decades with such great pleasure, and also to Ed Golding and the entire staff for the hosting and inviting us here. Much appreciated. It's been something that I have been looking forward to, and appreciate the Gollum Center for Finance and Policy as well. Kristen, I do have to say that your impact and inspirational work, both in the U.S. and globally, has really been tremendous, and you're such a wonderful colleague to me and so many other people, so thank you for that. You know, as a former educator, I just always love being with students, and it is a just special pleasure to be back here at MIT, where I did get my PhD a few years ago, but so many of those memories feel like they could be yesterday. You know, my time in the economics department was a phenomenal preparation for what turned out to be a very varied career, and that certainly wasn't expected or anticipated. And you know, that preparation involved a ton of work, and I'm sure you can all speak to that, but also lots of learning and really genuine investment from a remarkable faculty and many, many wonderful long-lasting relationships. And I hope that all of you can speak to each of those things as well. So today I'd like to share my perspectives on the U.S. economy and on monetary policy as the Federal Reserve works to achieve its dual mandate from Congress and to support a vibrant economy. First of all, my usual disclaimer: my remarks are my own and don't necessarily reflect those of my colleagues at the Federal Reserve Board or on the FOMC, the Federal Open Market Committee. So I'll begin with a brief overview of the Fed and its varied roles in the economy and financial system, and then I'd like to discuss the economy's performance in the post-pandemic recovery and monetary policy's role in restoring price stability. I like to get my bottom line up front. I often think that's helpful, just to provide a bit of structure to kind of hang points on. And so to preview my core policy perspective, I'm committed to bringing inflation sustainably back to our 2% target. I, for a long time, have called myself a realistic optimist. And what I mean is that while I'm realistic about the risks and the uncertainties, I do remain optimistic that this can be accomplished in a reasonable amount of time and with a labor market that remains healthy. But there's a significant amount of uncertainty around that outlook, and the recent data lead me to believe that it's just going to take longer than previously thought, and there is no preset path for policy. It requires us to be methodical, to make decisions based on a holistic review of the data, and to be patient. So Congress established, and I'm realizing I have slides and had not started them up there, so let me do that. So So initial title and just to get things going. So
Good
Congress,
example, just like Alfred
established
said,
the Fed as the U.S.
VWAP.
central bank more than 110 years ago. And our responsibilities all involve fostering a strong, stable economy and financial system in the public interest. Of course, economies have many dimensions, and so, in fact, the Fed's portfolio of work has a very broad range. I like to say that the Boston Fed's mission is supporting a vibrant, inclusive economy that works for everyone, not just
All
for
right,
some
guys.
people.
Y'all guys can watch
There are
this.
12 reserve
I'll be
bank
back in like
districts, and the Boston
10
Fed's
minutes.
district is most of New England. And we actively engage with stakeholders across all 6 New England states to learn about economic experiences, challenges, opportunities, but also to provide some transparency about what the Fed does and why, because really most people have very little idea what the Fed actually does. We're, of course, best known for conducting monetary policy, and that's what I'm going to speak more about, and all of the analysis and research that underpins it. But we also supervise some of the nation's financial institutions, provide back-end infrastructure and services for payments and financial systems. We examine factors that could limit people from participating in the economy, and a lot of that's motivated by our full employment mandate. And we support research and collaboration to expand prospects for community economic development. And since I'm at MIT, I have to mention that the Federal Reserve, and particularly the Boston Fed, has helped encourage innovation in financial technologies and payment systems, which we, of course, all rely on. And many of them are like the plumbing that, you know, when it works well, you're not thinking about it, but in fact is really important for so much that we do. We played key roles in the emergence of automated clearing, check imaging, digitized procurement and payments tools for U.S. Treasury. More recently, we worked actually in partnership with MIT researchers to explore the potential for a central bank digital currency, deepening our understanding and preparation in case Congress were to request a digital currency. And we recently built and launched FedNow, which is an instant payments rail that enables all financial institutions to provide their customers with real-time payments. So let me turn now to the economy and my outlook and monetary policy, and I am going to reference a few charts along the way. So just to start to kind of set the stage, this figure 1 focuses on the Fed's dual mandate from Congress, price stability and maximum employment, and provides a bit of historical context. So the left panel shows inflation using the Fed's preferred PCE measure. The blue line, of course, is total 12-month inflation, and the red line is core inflation, which excludes the volatile but obviously hugely important categories of food and energy. And then the green line is the FOMC's 2% inflation target. On the right, you see the unemployment rate, which typically shows a gradual recovery after rising during recessions, but the post-pandemic recovery has been highly unusual, and that's actually a theme that you'll hear through my remarks, because after spiking, unemployment fell very quickly, and it's now been below 4% since December 2021. The chart also shows that while significantly down from its peak, inflation remains above target. And high inflation is really like a tax that affects all of us. And in my travels around New England, people frequently share examples of its challenges. And in particular, the toll is especially large for lower income households that struggle to make ends meet. High inflation also impacts firms, complicating their budget and planning decisions. And so a high inflation environment, which highlights is really not consistent with maximum employment that's sustainable. And that highlights the complementary nature of our dual mandate, and also the reasons for my very resolute commitment to bringing inflation back to 2%. So FOMC has obviously been very focused on bringing inflation back down by raising the federal funds rate to slow demand and help realign it with supply in both product and labor markets. And after beginning to tighten in 2022, rate hikes were unusually rapid, moving the monetary policy stance from highly accommodative to restrictive. And that's also, something that's an aspect of being unusual. So since July 2023, the federal funds rate has been at its current level of 5.25% to 5.5%. And we're now patiently assessing how long it will be appropriate to maintain this target range. And then that's kind of a key setup. So before I say more specifically about my outlook and the implications for monetary policy, I want to discuss some dimensions of this very unusual cycle. And a theme of uncertainty, both in the data and key economic relationships, remaining elevated is kind of reinforcing that need for patience. So as I've already mentioned, the rebound in economic activity after the pandemic shock was surprisingly strong and rapid relative to past recoveries. And what this figure does is for real output on the left and payroll employment on the right, compares the pandemic recovery, which is shown in the blue line, with the average of the past 3 recessions, which is shown in the red line. And the figure really highlights the degree of disruption in economic output and employment from pandemic-related shutdowns and the comparatively quick recovery. And a lot of that rapid rebound can be attributed to unique dimensions of the pandemic-driven downturn, including, of course, the highly accommodative monetary policy and the unprecedented degree of fiscal support. But, you know, that fast, and there's lots more that one could say about that, but I think it helps to highlight just how different this cycle is from previous cycles. And that's a theme that comes out as well in terms of asking, you know, what should we expect and how should we think about that. But that fast bounce back came at a cost. Inflation surged, sparked by demand outstripping supply. And pandemic-related global production challenges, limited labor availability, transportation bottlenecks, Russia's war in Ukraine, all of those things worked to constrain supply. And as that situation was compounded by a shift in consumption patterns away from services towards goods. And so that's an example of some of the uncertainties related to relationships, as well as uncertainties related to data, which have been quite unusual during this pandemic cycle. In this context, an essential part of restoring price stability really entails realignment through a combination of supply improvements and demand moderation, because that dynamic of demand outstripping supply puts pressures on prices and on wages and has been a key dynamic that is relevant and speaks to the role that the Fed can play. Well, the surge in inflation was widespread, and that is illustrated, for example, in this figure, which splits core PCE inflation into its 3 main components. And I find the decomposition here really informative, and I look at it not because we have specific additional targets for particular components. Our target is total PCE inflation measured over a 12-month period, but because these components behave very differently. They have different dynamics, different determinants, as we think about how things are going and you know, what our outlook looks like, decomposing that, I think, really matters. So the blue lines show inflation over a 12-month horizon, which is comparable to figure 1, and the red lines show a 3-month horizon that reflects more recent data, but also show more volatility or noise. And so looking again at different indicators is quite helpful in terms of constructing a broad picture. And the charts show that the run-up in core goods inflation on the left panel was particularly fast, due in part to the household pandemic-related shift from spending on services to goods, and some of the supply constraints I talked about. In the middle and on the right, housing inflation and core services inflation, excluding housing, also rose notably, but with a bit of a lag. And the rise in housing inflation was driven by a surge in rents, in part due to housing supply shortage issues, and there's a lot more one could say there. And rapidly rising labor costs contributed to the rise in inflation for other core services. And of course, that is a large sector, over half of core PCE, and it's one in which wages tend to comprise a large share of firms' expenses. So while total
Cam,
PCE inflation
it's the same
peaked
price
in February
for
2022, the sustained easing
I have the
of
same price on
pressures
TopStepX
really began later that
on
year,
NinjaTrader 8, so
particularly
it's not lagging for
noticeable
me.
in 2023, when core PCE inflation fell roughly 2 percentage points. And that was the result of supply and demand moving into better alignment. And importantly, much of the economy surprising performance last year, especially in the second half of last year, can be attributed to positive supply developments, some of which were expected, but some of which really were not, including supply chain, labor supply, labor productivity, and I will come back to that. So in particular, supply improvements enabled significant disinflation in core goods. Similarly, housing inflation moved down with recent rents for new leases returning to pre-pandemic levels, and the additional supply of rental units coming online. And inflation in other core services moderated as supply challenges and cost pressures
No, I'm trading
improved.
both platforms.
And I do want to just briefly note two other developments in 2023 that really highlighted the significant progress that was made towards achieving our goals.
Yeah, I appreciate that,
The first
J. Powell.
relates to inflation expectations. Being in line or with readings that are historically associated with inflation being around its 2% target. Because expectations are such a key determinant of current behavior, they influence actual inflation and its evolution, and they're very high on my watch list. Figure 4 shows a variety of indicators of expectations. The right panel shows that longer-term expectations remained actually well anchored throughout the downturn and recovery, which is consistent with the Fed's credibility in terms of its commitment to restoring price stability. But short-term inflation on the left side, expectations, did jump in 2021 and then decreased to levels consistent with the 2% target by the end of 2023. So that was some additional kind of strong news about progress being made. A second thing I'll just briefly mention is that price changes across narrowly defined industries were also much less correlated in late 2023 than they had been in 2021 and 2022. You can think of this as the synchronicity of price changes, and reduced synchronicity is actually consistent with large price gains being less common across sectors, and is consistent with a kind of low inflation regime as opposed to the direction that we had been heading, which has more synchronicity, which is consistent with a higher inflation regime. So that was also good news. So while some of the decline in inflation had been widely anticipated, output growth was much stronger than expected in 2023, increasing 3.1% over the previous year. And given that robust growth, the realized decline in inflation was really quite remarkable and, of course, very welcome. Well, it's now May 2024, and while economic activity has remained relatively robust and the labor market healthy, at the same time with signs of coming into better balance, we have not, unfortunately, in 2024, seen further disinflationary progress. Going back to Figure 3, that showed that over shorter horizons, inflation has picked up in both core goods and core services, excluding housing, and it's actually moving sideways for housing. So, you know, on the one hand, the
these
actual
interest rates
data
are
is
high.
very
Who the
noisy.
fuck is
If you
going to
look
be able to
at
afford
monthly
that?
inflation numbers, the volatility is still elevated compared to historic numbers. And I would say that unevenness in the disinflation process is to be expected, is not a big surprise to see some less welcome news after such a string of positive inflation developments. But it's enough data that it's important to really take seriously. And going forward, we cannot necessarily count on continued supply-side progress of the pace we saw before to reduce inflation amid strong economic activity. And so, in particular, the goods sector is unlikely to contribute much more to disinflation, though it's possible that some of the previous improvements haven't been yet fully reflected. And while new tenant rent growth has generally returned to pre-pandemic levels, rents of existing tenants are still catching up and continuing to put pressure on housing inflation. And it's likely to take some time before we see that pass through. And then additional labor supply and productivity gains are highly uncertain. So progress on inflation will very likely require lower growth in demand, particularly to facilitate further slowing in the core non-services inflation piece. So against this backdrop, a key question is really how to think about realigning supply and demand going forward. And there are a lot of dimensions to consider there, but what I'd like to do is focus on the relationship between wages and prices, which is especially important for core services excluding housing. And in particular, what I'd like to do is explore a common concern that rapid wage growth may be fueling price pressures and preventing disinflation. So Figure 5 shows the recent evolution of both wage growth, which is the blue line measured by ECI, the Economic Cost Index, and PCE, price inflation, which is the red line. And it shows that recent wage growth is above its pre-pandemic range, and also that the current gap between wage growth and price growth is relatively large. But the chart also shows that inflation grew much faster than wages earlier in the recovery, so wages are in part catching up to past price increases. Moreover, real wages, or wages adjusted for inflation, should track growth in worker productivity over the medium to longer run. But the real wage growth observed over the course of this recovery has yet to match measured productivity gains. And Figure 6 illustrates this point by showing the gap between real wages and productivity. Real wages, which is the blue line here, fell during the pandemic and initial recovery before retracing most of the decline. By contrast, labor productivity increased notably at the start of the pandemic.
I never had a reaction channel.
As production initially shifted from less productive services to more productive goods, and then decreased some during the unusual economic reopening.
That's interesting. What made you think I had a reaction channel?
Up again more recently. The main takeaway
I react to the
here,
charts every day, so I guess technically, yeah, I do. Never mind.
Measure wages
We'll
and
react to the charts.
productivity, but that gap is something that comes through. And the main takeaway here from the evolution of wages, prices, and productivity is that in real terms, labor remains less expensive than it was before the pandemic. And importantly, this conclusion also holds when we consider wage and price indicators measured from the perspective of employers. Labor now accounts for a lower share of businesses' costs overall, which is reflected as well in a declining portion of output going to compensate workers. And so labor's share is now roughly 2 percentage points below its 2019 average for the total economy, and that pattern holds for most industries. So overall, firms appear well positioned to potentially absorb some faster wage growth without placing additional pressure on prices. And I say potentially because with robust demand, there's still a possibility of passing higher wages through fully to prices, and those dynamics may have been at play in the first quarter of this year. But that said, continued productivity gains could allow further solid but non-inflationary wage growth. Interestingly, other highly industrialized countries have not seen similar favorable labor productivity developments as shown in Figure 7. Now, reasons for this difference are unclear. It's obviously productivity is something that's very complicated, measured with error, and this obviously warrants quite a bit of study. And I will also note that productivity gaps were also evident before the pandemic. But one possible explanation is that differences in the labor market reallocation process across countries following the pandemic shock may have resulted in better matches between employers and employees in the United States. Whatever the reason, it seems likely that recent U.S. productivity gains largely represent a level adjustment rather than a persistent increase in productivity growth. Still, my employer contacts around New England continue to mention ongoing technological investments and process optimization efforts, and that suggests that there could be more to come in this level improvement in productivity. But still, future path of productivity is obviously highly uncertain, and a slowdown in activity, I believe, will be needed to ensure that demand is better aligned with supply for inflation to return durably to the Fed's 2% target. So in this context, the role of monetary policy is to restrain demand to help facilitate an orderly realignment process. And the recent upward surprises to activity and inflation suggest the likely need to keep policy at its current level until we have greater confidence that inflation is moving sustainably towards 2%. As emphasized in last week's FOMC statement, the committee's decisions will remain data dependent, carefully assessing the constellation of available information. But policy not only needs to reflect a steadfast commitment to restoring price stability, but also to aim to preserve a healthy labor market, which is, of course, the other facet of our dual mandate. There are risks from easing too soon, which would make our job of restoring price stability more difficult, and there are risks from holding rates high for too long, which would lead to unnecessary economic disruptions. A moderately restrictive stance, which is how I view the current policy, may be the appropriate approach for balancing risks that are two-sided. I do expect that demand will eventually slow as needed to better align with supply, but the timing and magnitude of moderation remain uncertain, and it's also possible that policy became restrictive more recently than thought and that we've yet to see its full impact, especially if the economy becomes more interest sensitive over time as firms refinance their existing low-cost debt and households exhaust the excess savings accumulated earlier in the pandemic. The current situation requires that methodical perseverance, recognizing progress will take time and will continue to be uneven. Expecting all of the indicators in this uncertain, complex context, that's too high a bar for us to start normalizing policy. And so among the many things that I watch carefully, here are 4 things that I highlight that I'll be watching for. Short and longer term inflation expectations remaining well anchored. Further sustained disinflation, especially in the components that remain elevated. Evidence that wages continue to evolve in a way that's consistent with price stability, and ongoing indications that labor markets are moderating in an orderly way that better aligns labor supply and labor demand. But overall, policy remains well positioned to respond to incoming information as we assess the evolving outlook and the risks. And the unusual nature of this cycle, the continued high degree of uncertainty and the still elevated inflation all highlight the importance of patience, analysis, and I would say a bit of humility. So I'll end by saying again what a pleasure it is to be back here at MIT. As I bring up my final slide, I just want to say to the students who were here, I took a look back at the Sloan School's mission statement, which includes the phrase to develop principled, innovative leaders who improve the world. And I just want to encourage each of you to take each aspect of that to heart, knowing that you have a lot to offer our world. Extraordinary things happen when we care,
whether
when
you're
we
at the
study
top of the
issues,
rung
when we collaborate
or you're at the
with
bottom.
purpose,
Everybody
and when
has
we
a
act.
piece or they play a part in this economy.
This slide shows some of the
So
ways
she's not
and
lying.
some of the people that I'm meeting
It's
with
just that you
who
may
are
not
doing
like where
just
you're
that.
at or where you fit
best
in
wishes to all of
at
you.
in the
Thank
system.
you, and now I look forward to
But the great
the
thing about it,
conversation and to your questions.
the great thing is that you can choose. You can pick and choose where you want to be through your work.
Okay, could you help hand out the mics when we do the Q&A, and you know the order? Okay, they have copies. Okay, I think we have mics, so we don't need nobody's.
Okay, so I don't think, I don't think,
so
we're not gonna watch that. So she ain't said nothing that was too crazy. She did say some key things that I picked up on. She did say some key things. Obviously, I mean, she's not saying anything new in terms of what every Fed speaker is saying. They're saying that inflation is not where they want it to be at. She was speaking about the housing market as if that doesn't make no sense. Like, houses are expensive. It's not the houses are expensive. Money is expensive. And on top of money being expensive, these houses are so overinflated because these buyers, either they're selling at a loss or they're trying to overinflate the value of their property so they can get their money back. That's the majority of the cases. I mean, obviously, if you got your house during the pandemic when money was free, congratulations, don't ever give that shit up. Obviously. But for everybody else that didn't take advantage of that, money's expensive. Housing, people's not going to want to get into a house because the upfront cost is too much. And we all know that the sink breaks for no damn reason. I mean, it can work every day out of the year, and then one day it just breaks. It blows up for some whatever reason, and you're responsible for that. The water heater blows up, the toilet blows up, the carpet blows up, the house itself blows up. You're responsible for it. So if people can't afford the upfront cost of the house, nobody's not going to be able to afford the maintenance that is required to keep up the house. And then especially if you are one of those people that can do that, I mean, you got all that, and then you got these states. I mean, now they're implementing these squatter laws to where squatters are not going to be seen as tenants. However, you still have to prove that they were never tenants. So it's one of these things where I think Florida is very has already passed this, but at the same time, you have to prove that they're not tenants. And you're going to still have to go to court and prove that. But I mean, they're doing better with the process on that. So you have to deal with all that. And then especially if you're in an HOA, I hear that these HOAs are tough, and they're finding every reason to find you. And these fines aren't cheap. These fines are not cheap at all. And I would hate to be in a house that I can't do whatever the hell I want to it. I mean, if I want my grass to overgrow, goddamn it, I pay for that grass to overgrow. But all jokes aside, I mean, there's really no incentive of being a homeowner. So I mean, it's not surprising that they're seeing that. There's no incentive. And if you rent out your home, if you have Airbnb and all that other stuff to try to turn your home into an asset that generates income for you, well, sometimes that asset becomes a liability. You have people that come and they destroy your home, and 9 times out of 10, you do have the insurance for it, but your premiums on your insurance goes up if you have a claim. Yeah, man, Moxie, that's the unfortunate part about being a homeowner. You have to prove that somebody is not a tenant. You have to prove that. And I can understand in New York why they would have stuff like that because of how ruthless the housing and what is it called? It's not housing market is or was. I mean, it still is. It's just that I mean these guys can't be as ruthless as they used to be. I mean, shit, if they wanted you out their house because they had somebody that was willing to pay at a better price, there was no safe place. There was no politicians worrying about what the hell these guys were doing. That was getting you out their house, one way or the other. If you want to be in that house as bad as you say that you wanted to be in that house, you'll find yourself a part of that house. That's just how ruthless it was previously. And I'm pretty sure that's probably where all this stuff is coming from. I mean, these laws are here for a reason. It's not like someone just went to an office and made it up. So because of previous ruthlessness, this is my assumption. I just want to say that this is my assumption. Because of how ruthless it used to be, I'm pretty sure that's where these laws came from. But yeah, there's no real incentive. Yeah, they are. Because I mean, they come in, they destroy your house, and you can't go to the bank and say, hey, there's a squatter in my house. They was like, well, shit, dang, you still making them payments on the first, right? You still making them payments, right? They don't care. They don't care. You are still required to make them payments. You're required to repair any damages that these people inflict to your home. I mean, who wants to deal with that? I mean, we've already talked about the woman that was arrested. I think, if I'm not mistaken, I think she got a lawsuit, and I think they awarded her something. Let me look at this. I think I saw something speaking to that. So, a woman arrested in New York for squatters, awarded settlement. So I think she got like a settlement or something. Because she had like $1 million house, which is crazy because, yeah, this lady right here, I think they gave her a settlement or something like that. I think they did something. Anyway, it says after can be considered, so after 30 days in an inhabited property, a squatter in New York could be considered a legal tenant, which is absolutely crazy. Absolutely crazy. So there's no real incentive to be a homeowner. I mean, honestly, it was the mortgage for me. 30 years of commitment to one place, that was enough to tell me that it would be what's the word? It's highly unlikely that I will ever own a home because I just hate the fact that the mortgage is for that long. That's crazy to me. Real estate. That's the word I was looking for. Real estate. I was like, dang. It's like why can't I remember what the hell it's called? Real estate. But anyway, says my system is so someone is one of okay. Yeah, good on him. Did anything happen to him, Matt Moxie, when he did those things? Says people are squatting in Airbnbs now too. Yo, that's crazy. Like, that's crazy. That's so crazy, man. Crazy. So these those videos about this homeowner, I don't know his name. He started putting his encounters with people because I mean I guess he owns a bunch of properties that he rents out, and obviously during the times where people couldn't pay for it and was protected by that renter's law or whatever. I mean, from the consumer side, obviously that's great because a lot of people did take advantage of that. A lot of people said that, well, if I don't have to pay rent, then I won't, even though they did have the money for them. And the homeowner had to eat that cost. And I don't believe the government gave any supplement for that. They said, well, shit, you got a home. Apparently you got money. And I don't believe that any homeowner got any back pay or any contribution from all those years. I mean, I think we had it for at least a year or two. That's a year or two worth of rent gone that the homeowner couldn't even collect on. That right there would be like, yeah, fuck that. Like, nah. The government literally tell you to do with your property that you own and say that you can't collect rent because of some law and blah, blah, blah. Well, okay. And then they don't even compensate you for that. If they did, then I'll look into it and I'll adjust this claim. But I don't believe they did. I don't believe they did. I didn't see anything. Let's actually look at that. So okay. So did homeowners get back pay from not being able to collect rent? This during the pandemic. Says furthermore, cutting back on maintenance and or home improvement costs meant that landlords may not be able to collect with rent. Did the change who became anyway? Says eviction protection for unpaid rent during COVID. Yeah, like that right there was like, yeah, that's I mean, we can understand both sides. I understand that a lot of people lost their jobs, so they won't be able to collect or they won't be able to pay their rent. But on the other side of that, you have these landlords that if they don't, they have bills to pay as well. They have bills to pay. I mean, everybody has bills to pay. But then at the same time, a lot of people did take advantage of this. Anyways, it doesn't matter. Says Dominica is not America, nothing happened. Oh, you said it was in Dominica. Okay, I thought. Okay, anyway. So my court get the right after she moved in. Damn, that's crazy. Yeah, that's crazy. Yeah, that's crazy. Yeah, I missed that. I missed that first part, man, Moxie. But yeah, I mean, there's no incentive to be no homeowner, and there's no incentive to be one. And especially with this new generation, I mean, the boomer generation and parts of the millennial generation, yeah. Once society moves past that, because I mean, boomers are kind of about to go into that. Anyway, I'm not going to say that. Anyway, looking to the future, you're not going to convince anybody to pass the millennial generation. They're not looking to buy no homes at all. And I feel that the real estate market will definitely take a hit. It's already taking a hit now. You're not going to have, I mean, these kids are entitled. The only thing they care about, they'll live in a room, a dirty room with a mat on the floor, a TV on the stand, and that's all they need as long as they got their phone. That's all they need. That's all they care about. They don't care about living in a nice heart. I mean, well, they do. They only care enough about it to show it off. I mean, they'll rent it. If they see a nice car on the side of the street, they'll take a picture with it and say it's theirs. I mean, they don't care. They don't care to own anything. So yeah, the real estate. It's going to be very interesting to see how the real estate industry is going to have to evolve. Because I think there's not going to be. I mean, unless you got like, well, no, they kind of do already. Never mind. Yeah, I'm interested to see how that's going to evolve over time. I'm interested in that. But I think that's it for today, man. But yeah, we definitely we already wrote in our journal. Even our play trade is I think I'm still in it. Yeah, I'm still in it. So I'm just gonna leave this right here. I'm gonna leave this right here. If I get stopped out, I mean, I've already made my money in this. I actually took this in minis, so I've already made the money. This is basically a runner already. And this is just a play account because let's just be honest. Planning for these trades can be mentally exhausting. And just having an account to just play around in, it just alleviates that. It just alleviates that all that mental resources. It just kind of brings it back. It's okay. I don't have to think about it. If I see a setup, I take it. If I take a loss, I take a loss. If not. Right now, this is a green trade, so this is what this account is for. And I would actually highly recommend having something like this, like an account where you just play around in and just keep it as an account you play around in and learn and actually look at the price action and just take chances, make mistakes, and get messy, like Ms. Fritz will say. That's what this account is for me. But that other account, we're going to plan our trades, baby. But that's all I have for today, guys. I appreciate you joining. Hopefully we can get Smith back in the room more often. But if not, we'll just continue to do what we have been doing. We'll just continue to do it. Have the paper account. Yeah, it's free. That paper account is free. It's just that you don't have the emotions attached to it. That's the only thing. That's my only gripe against that paper account. I see it all the time in Top Steps forum. These guys are making so much money in the practice account because, I mean, there's no real risk. You're trusting the setup more because there's no risk. However, once you get into a moving market with real capital, actually, let me make this more clear. In that practice account, it's an infinite resource account. You can lose 10 times and you'll still have the account. With these accounts, these evals and stuff like that, I mean, they run off of limited resources. It's first you have to pay for them, and you only have a certain amount of drawdown before you get closed out, and you have to either reset or purchase another one. So based on just human needs by itself, because it's a limited resource, your emotions are going to get attached to it. That fear of loss is real when your mind perceives that you're living in scarcity. And that's kind of what these accounts are really putting us in a state of mind. You only have $4,500 in drawdown. So with that in mind, you're already in a scarcity mindset. And in that paper account, you don't have anything. You can lose $10 million and it doesn't matter. You haven't lost anything. So I think that's like one of the big difference between paper and these real accounts is the emotional aspect, or at least the mind state that you get put in. But Alfred is right. It is free. It is to practice on. But when it comes to the emotions, you got to get some skin in the game, baby. He said not playing real money for a play account. I mean, these combines are cheap, man. I mean, you can get an account for $19. They're cheap. $150. Well, I won't say that because I guess $150 is cheap for me. But that might not be obviously that wouldn't be the same for everybody else. So I guess in that case, I kind of was thinking about myself. But Top Step is offering a $19 combine that you could practice in. Just throwing that out there. That is cheap. But I mean, how else are you going to get that? Because I mean, that's the only thing that's going to stop somebody from really being a successful trader. You have to get your emotions while trading, at least to a manageable point. We all get emotionally hijacked, but we have to get to a point to where we're not chasing big green and red candles. We're getting in that support and being patient and just accepting if we lose or not. I know it's harder to say than do, but that's what separates the successful traders from the ones that don't. And I've seen plenty of Top Step said it, Apex has said it. If you read a lot of these articles about prop firms, these big ones, they say it. They say that their successful traders are the ones that make $200 to $300 a day consistently. Consistently make $200 to $300 a day. The ones that swing for, like the big traders, the ones that shoot for the fence and enough is not enough, they say that, yeah, they're successful sometimes. They get payouts sometimes, but in the long run, they don't see those accounts after 3 months. Really after 1 month. Really. But the ones that does last for more than 3 months, and it's called a quarter customer, is the term that they use, are the ones that are getting the consistent $100 to $200 a day. Those are the ones that are in it for the long haul. And everybody has said it. So at least for me, emotionally, my ego can accept making $200 to $300 a day. It was hard enough for me to switch down from micros or from minis to micros. That was already a task within itself. However, it is true. Unfortunately, it's true. It's true. I've kept my accounts longer. When I switched over, and I'll share this with you guys. As soon as I switch over to minis, because I got tired of being consistent, that's exactly when I blew the account. Because I saw that big number and enough was not enough. Enough wasn't enough. Enough was not enough. So hopefully you can take that information and do something with it. I'm going to stick to this micro thing. I'm going to stick to it because it's already shown in the past that it works. I just hate the fact that it does. I hate the fact that I have to be almost perfect with minis, and if I don't, I mean that red number grows really fast. And if you don't have a trade plan, you can see a $400 loss turn into a daily loss limit loss. And it can happen just that quick. There's no room for error with minis when you're first starting out. No room for error. You got to be perfect. And if you can't look in the mirror and say that you're a perfect trader, then the reality is that you shouldn't be trading minis. I mean, that's just the reality, unless you're a perfect trader. And to add on to that, a perfect trader with a large account, because you really need, in a real world, you really need at least 50K to trade minis. And if you have a 5K account, you should only be trading micros. All right, so we got a break below this this VWAP. We got a break below. You know what? You know what I'm gonna do? I'm gonna just let this run for the rest of the day, actually, because I think if we get a break of this low, we go into the next area of supply or demand. I don't think we get this, and I don't think we get this. I don't think we get this today, or maybe we do. Maybe we do. Who knows? But the next area of demand is here. And I'm just gonna let this run. I'm gonna let it run. Let me see what happens and let it run. Hey, like I said, man, the emotion part, you're not gonna get that in the sim. You're not gonna get that in the sim. Everybody's a perfect trader in the sim. I mean, get a cheap account, $19, a cheap account at Top Step, Apex, whenever they're having their 90% off sales. We got to get the emotions down, man. That's what's holding us back is our emotions in this market. That's what holds everybody back. But all right, guys, I got to get to work. I got to do my hobby, I guess. But I appreciate you joining, and we'll do this again tomorrow. Peace out.